on a day where we get such a important number like CPI, but it's another strong labor market number coming out. So first-time filers for unemployment insurance, 209,000, historically very low.
All right, so the tiebreaker, if there was a little bit of a debate here on how important inflation was going to be, it would be jobless claims. I mean, here's the thing. No matter which data point you pick the last week, all consistent, all solid as a rock. The ISMs that are above 50, the last week's employment on the top line, of course, PPI yesterday, last week's jobs data on the monthly and weekly items too. I mean, it's just amazing. It just looks like we haven't cracked despite everything the Fed has done.
Yeah, it's pretty interesting, Oliver, what you're getting, and this is my opinion, you're getting a strong or a firming U.S. economy, but it's not showing up in the inflation numbers, right? The inflation numbers are moderating. You've got another core number down 0.2. Now, would we like it to be coming down quicker? I don't know. I think the pace is acceptable for the Fed. It'll be interesting to see how the Fed members that have been commenting all week, how they comment on this number. But Oliver, I think this is maybe one time a historic, real soft landing, not just the discussion of a soft landing, because the economy's staying strong, but inflation is slowly but surely, maybe not at the pace we'd like, but it's working its way lower, Oliver.
All right, well, markets have been able to take in stride all those better than expected data points the past week. Inflation might be a little bit slippery, though, compared to some of those. We'll see if the market can get its hands around it. Right now, we are under a little bit of pressure, still positive, but definitely have come off the highs of the morning. So a test underway here. Thanks, Kevin Hanks, for taking us through the numbers. We've also got stock news, too, so let's not forget about that. We'll come back to the macro discussion, but let's talk some companies with Renita Young here joining me in the studio. You've got earnings from Delta kicking things off. Seems like that's helping stocks and also this sector, which had been beaten down coming into this report.
Absolutely. We know we've seen some short-term pressure in Delta and other airlines because of fuel costs. Yeah. They had risen. And despite that, we saw robust demand for travel with this company. Delta reported better than expected earnings. Of course, revenue came in better as well, and earnings beat record revenue for the month of September. And then the company managed to raise its full year outlook. Now,
that's impressive.
That is very impressive. Now, it did make some cuts to part of its outlook, other parts, but we'll get to that in a moment. Now, the company's profit rose nearly 60%. Adjusted earnings came in at $2.03 a share versus that $1.92. And revenue grew almost 11% to $15.48 billion. Adjusted revenue was up about 13% year over year to almost $14.6 billion. Domestic passenger revenue up 6%, but international revenue jumped 35%, and transatlantic revenue jumped by around the same percentage-wise as well. And not only was there such a large demand for international travel and transatlantic travel, there was a huge demand for premium seats as well. And so looking ahead, Delta actually did cut its earnings per share guidance range to about $6.25 at the high end from $7 at the high end. They cut that free cash flow estimate to $2 billion from $3 billion, but they raised the sales growth outlook to about 20% from between 17 and 20%, and they expect solid travel demand to continue into this next quarter.
Sounds like if you believe that the margin pressures are out of their control, then this is a good report. But given that they had to cut some of the cash flow and earnings expectations on the high end of their guidance, there's obviously some margin pressure showing up. It's just whether or not it's company specific or energy specific. It sounds like there's a good case to be made that it is energy costs, but still, I'm a little bit surprised given they've got higher premium travelers, international flights as well picking back up. I guess the market just prioritizing those good things this morning.
I think you're right, too. You know, we know we've seen customers, at least, a little bit upset with Delta lately, with how it's been accumulating miles, how it allows people to accumulate miles, right? But at least investors are shrugging that off and some of the other weaker points of the earnings report.
Yeah, and I do think that given we saw some specific moves with the airlines, to your point on crude oil, a lot of days where we had that pop in energy, even just this week at the beginning of the week was an example. When we came in, energy was up, crude oil popped, airlines were under pressure. So maybe that element of it has kind of been priced in and understood by the market at this point. And we got a nice little jump here, so it's definitely helping out. We've also got some news coming out on a different part of the transportation group. Let's go over to the labor situation with the autos, and Ford in particular. UAW has a little kind of twist to the story here this morning.
Oh, absolutely. And this was not a pre-planned walkout.
Yeah.
Now, yesterday, Ford UAW members walked out of the job at the Kentucky auto plant. This is Ford's largest plant, and it builds very important trucks. It builds a lot of the pickups. It also builds the F-Series pickups specifically. It also builds full-size SUVs, Lincoln Navigator, the Ford Expedition.
Those are the money makers.
Those are the money makers, and Ford says that this work stoppage there is going to generate painful aftershocks. Operations in total employ about more than 100,000 people, not just at that plant. To be clear, 8,700 people walked off of the job, but since we know these plants are interconnected, they say it'll impact several other plants as well during this process. And they say serious economic consequences might come from this. This is the plant in Louisville, Kentucky. It's also one of America's largest plants, and it could be a detriment. Now, of course, the UAW, you can say they kept their promise. You know why? Because they've been ramping up these strikes.
Yeah.
And this, however, is the first time that they did not pre-announce that they'll be walking off a specific plant. So this is why it might have caught some people by surprise. However, the UAW, when they responded, they said it's shocking but unsurprising given the union leadership's stated strategy of what they say keeping the Detroit 3 wounded for months through. Other strong words coming from Ford, saying that the decision of UAW is all the more wrong-headed given that Ford is the only automaker to add UAW jobs since the Great Recession and assemble all of its full-size trucks in America.
Wow.
Strong words.
Yeah, an interesting counterpoint, but unfortunately I don't think that they're really taking like the past as, into account for the demands today. It seems like this is very much now and a reflection of the economic situation. Ford down, not surprised. I mean, this after the last discussion we had on the subject was a little bit more positive and maybe some conciliatory tone happening. This is very much the opposite. So shares under some pressure. We're going to have a little competition in the industrial space this morning. Ford down, but Delta up. Thanks, Renita. All right, when we come back, let's talk some more about some of the numbers this morning from the economy. Jay Pawlowski joins us to walk through some interesting charts and talk about what it means for investors going into a part of the calendar that generally is a little bit more favorable. Once we start moving out of September and October, of course, into the year, usually a good time to be in stocks.
I remember when I first started flying.
Good morning. It's October 12th. We're going to be streaming stocks, options, futures trading today. Guys had a good morning. Had a good rest of your day yesterday. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT. And we have a free Discord you can join. Link for those in the description. But a link for Discord and chat as well. I got about 5 minutes to open. Thanks guys for your likes. We've got 3 of you. Thumbs up the stream. I appreciate it. Did have CP live this morning. and initial jobless claims. Assuming they were close to expectations, I haven't checked yet. Not a big reaction yet. Or not a big reaction at all. Let's see. Continuing jobless claims came in at that's 1.7 million, I think. Forecast for 1.6. And then core CPI year over year is 4.1. That was the forecast. Core CPI month over month was 0.3, which was the forecast as well. So this is maybe just from jobless claims, you're getting that little negative reaction. And then CPI month over month non-core was 0.4. Forecast was 0.3. CPI year over year non-core was 3.7. Forecast 3.6. So slightly higher inflation expectations on normal CPI, not core. Everything pretty close to estimates. Wonder if the jobless claims is outweighing the higher inflation. Higher inflation would typically be pretty bullish for the market. Or cutting of rates, or not raising them. We're still green. Looks like SPY is up 10% pre-market. AMC's up 1.5. GME is up 0.5. TUP was up like 25%. It's cooled back down. GNS is up 1. WeWork's flat. Kramer's flat. Jones down 1.3. Two minutes. Morning guts. Top ticks and bottom ticks. There's the bell. Tupperware. Gap down and open. Down 4. What happened up 0.10%. So green. Domino's Pizza 3.8. Birds is up, I think. No, just no trades yet. GME down 1%. Turk up 4.25. ETOO have earnings? Maybe they're down 41%. Beyond's down 5.8. RAD's down 4. TUP's down 7. They're all taking a little breather. WeWork's up 2.5. AMC's green 2%. Mullen's down 4.5. GME is down 1. SPY made this. I made a cup over here. And even another one right here. Last 2 days. I don't know what the post-market rally was on SPY. Yesterday, that was kind of strange. See if it forms a little handle here. SPY now red. To VWAP in green. Let's see. 4 o'clock we have Colin speaking. Natural gas storage at 10:30. Cleveland CPI at 11. Crude oil imports at 11. Gasoline production at 11. A lot of commodities 11. Bond auctions at 11:30. WSDE report at 12. 30-year bond auction at 1. And Bostic speaking at 1. And then tomorrow we have import price index. Harker speaking, so not a whole lot. Really, today was the big data dump. AMC's now red. GME's coming down 1.7. We work down 3 1/4. I might get into WeWork if we can get back down to that price I was trying to buy it yesterday. Top down 7.3. That's such a strong candle yesterday, closing near the high. Might be a good dip buy also on this thing. bipolar so volatile. It's pretty illiquid or something. No, it's not. I don't know why. Spreads are kind of wide. I don't think it dances around like crazy. Down 9.5 now. Coming down some more. Ah, GME's kind of flushing. Down 2.5. That resistance. He's down 1. BNS is down 5.5. TUP could be starting to roll over here too. Even at this high, I was not at the top of the channel. Might be wanting to come down and fill that gap. We work down 5. Is this where I want to pick it up? Or was it? It was right there. This thing moves fast, man. Kramer's up 4.5. Jones down 4. I still kind of coming down. TTOO dip? I'm not catching that. Is that why it's down so much? They had earnings, I think, too, right? Is that from the reverse split or earnings? I don't see reverse split. I do see earnings, though. GME down almost 3% now. Probably getting some calls in the break of this channel. Maybe sell some cover calls in GME if we get a bounce. The market, see if we can retest resistances here. I got some starter position. Those will pop. See if it respects this tapering a little bit right here, this channel. No, it didn't. Okay, I'm out of those. We bounced off of yesterday's VWAP level. Not bad. Top. Wow, look at that reversal. My goodness. Respect to the bottom of that channel. Yes, 13% move. Crazy. Nice little dip by there on top. Maybe we also. grab some puts on that channel break. Yeah, Felly's pretty lame. You might have settings for wash sales or whatever, Ace. That I don't know if you've messed with that. Did we not let me get in there? I'm out of those puts. Get a little whipsaw here. Wii is not easy to get in and out of. I got some Wii shares. Got some spy calls too. quite catch the dip on Wii. Got some of it though. Up is volatile, man. That's crazy.
Let's get nuts!
Maui Sam, good morning. Happy Maui Sam would like you to buy ice cream for the children in your family. No many what age. Aloha. Thanks, Maui Sam. Appreciate it, man. I'll have to let them know. Ice cream's on Maui. Maui Sam. Appreciate the generosity, Maui. Aloha. No matter what age. Nice. No age requirements on this ice cream. Yeah, I don't know, Ace. I've had weird stuff like that with Fidelity too. What you have sounds a little different actually, but yeah, it's strange. There's VWAP on Spy. I'm adding to my calls here. Looking for Hive Day. Complete this little cup. I think this was potentially a handle on this larger cup. Right here. Actually, nice bounce on the 20 right there. Put a stop on the Wii shares.
that are on the book, and then you have to be able to lend that money out in order to make money on the spread, right? That's that net interest margin or net interest income that we talk about. So let's say that they got First Republic Bank at around 60 cents on the dollar when it comes to the cost of capital. That's immediately accretive, and we're continuing to actually see that being reflected in the earnings announcement in itself, which is why you can make the case that the valuation the stock could have moved to the upside just because of the fundamental dynamics of acquiring a pretty decent portfolio, relatively speaking. And that's why I think we are seeing the market move to the upside. Once again, they have around 4 business units, and none of them are really more than 30% of the overall business in itself. So even if we do see slowing in, let's say, investment banking, they can really offset that with some of the other areas of their business. Another area to kind of focus on, and I'm not sure if it's going to be a huge drawdown to the downside, but we are seeing it in the
I was looking at this prior. That's not a very good
commercial and industrial lending.
entry on
I think
risk
that's
reward.
going to be the biggest question mark because it's the most illiquid market that we see as far as economic data, but it does have a big windfall when it comes to economic growth. So I think that's going to be the biggest question mark in itself. But once again, I think the market's going to really pay a premium more for banks that are able to sustain, and maybe they're not growing right now, but able to sustain rather than banks that are continuing to lose ground because the assets on the books continue to lose value as rates go up.
Okay. Yeah, I like the point about looking at where they're actually getting, credit interest, and if there is actually going to be any real activity of loan formation and signs that maybe the banks are benefiting from this surprisingly good economy, or has that been mostly kind of relegated to some of the data and not so much the actual fresh loan and lending activity? Because to your point, there have been some signs of strain of that the past year. But that would be welcomed by this market, I feel, especially for the group that has been beaten down the way these have, with the exception of JP Morgan still up on the year. But it always sets the tone for the rest of the sector. So a good deep dive. Thanks, Kevin Green, for the preview. Let's do some trading with Joel Hawthorne, head trader and CEO at themorningsnapshot.com. Not a lot of banks trading like JP Morgan right now. Joel, does that make you want to be in on it or fade it on a connection to the rest of the group?
Good morning, Oliver. Thanks for having me today. I would say absolutely. I think today is one of those days where, overall thinking that JP Morgan ahead of this earnings report is more so a fade for me. I'm a bit of a bear. Just looking at some simple technicals, we saw that about roughly the 52-week high is about 159.38. Pairing that with we saw 160s get hit here the previous earnings cycle. Or just shy of that, just shy of 160s. That's when that 159 or so got hit. And we saw the aggressive pullback. And I don't foresee or anticipate at least that 160 being traded through now. So I'm a bear here at this level. Okay, so you're looking forward to maybe get a little bit closer in line with some of its peers here and drop. But how much and what's the way to approach it at this point? Are options pretty affordable to trade? I mean, or do you want to just buy downside or sell upside at this point, Joel? Definitely using selling some options, using some protection. The most actionable options traded in JP Morgan right now are the 150 calls that are being sold for next week, followed by the 152.50s, the calls for this week. So if we think about that right now, we're still out of the way of those 160s that I mentioned. I'm actually going to be putting on a bearish trade here. I'm going to sell the 160s that expire November 17th, simultaneously buying the 165s that expire the same day, collecting a credit about a quarter and breaking
buy below VWAP now.
160 and a quarter. So that allows me again to use that 160 price level that we discussed.
We back down to the bottom of the channel.
Strong resistance.
If it wants to fill this gap.
Is 159.38. So that's why that 160 is a key level for me. This is a high probability trade. Absolutely. I want to stay away. I mean, obviously we know earnings, news, we know knee-jerk reactions. We can't foresee those things. So definitely want to put on something that really puts, there's a poker term called having, when you have the best winning hand, called having the nuts of that position. So this is that position. This is you've been waiting a few orbits and you got the top of your range. You got aces and you're just putting that in pre-flop. As long as there's no major variance in the outcome, this should be a trade that gives you
their
your
outages
credit.
are unacceptable.
Not a huge one, but
It's
for
a
sure.
pretty safe trade going into a report for a stock that's already been outperforming. I mean, the
TUP.
possibility of JP Morgan ripping to a fresh high, that would probably mean something so fantastic about our underlying economy, you wouldn't even care that you lost the trade.
Yeah, and ultimately, the loss would still hurt, obviously, but it definitely, in that regard, I mean, breaking a fresh new high would mean that
Oh, it was
there
from a
would definitely
stock
be
split. You're
some
right.
kind of
Oh,
offset
Webull
or
shows that it
answer
was
that could
earnings
possibly
today.
find to be a part of that momentum. So absolutely, that 160 level being one, we know that 158.
I'm not buying the dip on
is
it
very
though.
key right now, and the option paper is nowhere near that at the moment. But again, anything can happen. So we also have 36 days until expiration on this trade as well. So that's key for the building of this trade as well.
Yeah, you got some time here. Okay. Thanks, Joel. Like the trade, selling the call spread to the upside, looking for JP Morgan to stay under its 52-week high. Joel Hawthorne, head trader and CEO at themorningsnapshot.com. All right, stocks are hanging in there as the NASDAQ is doing a lot of legwork, taking the market on its back right now. Big tech companies and the mega cap space is generally higher this morning, while everything else is under some pressure. When we come back, we'll talk some ETFs and the higher for longer environment, what that might mean for a few more cyclical and industrial sectors.
Dang it, we literally started dropping right after I bought. TUP, look at that, up 4.5. Large intraday move already. I'm gonna add in my calls there. Got this inverse head and shoulders. Just a little one right here above VWAP. Take some profits at high day. Back to work, Tasty. Thanks, appreciate the thumbs up, man. You were out of work from the writer's strike? Back to work, YOLO, 1 to 2 buys on each. Well done. Yeah, I think there's some upside on those probably. I don't even look at the charts, just looking at SPY. Probably not a bad idea. Yeah, you've got earnings on Tesla. So, not sure if you're planning on selling that before earnings, but might have a little rally into earnings. Pre-earnings run up. Profits to GME. We still looking at Mullen? Oh, broke the downside? Yeah, bear flag. Nice, tasty, yeah. Not sure I'd hold through earnings. Sell some. A little exposure. You're up. Yeah, Malt's down 3-3. Yeah, I'm not sure. Not sure if anyone's I think some in our Discord have DRS their barbecue shares. Top over 10% now. Oof. It's not tapering. See what happens at the high of this channel. Pick the wrong one. We should have gone top. 1.5. Are you in the process of DRSing Maui? There you go, Tasty hasn't DRS'd. Pretty choppy morning so far on SPY. Like, we have some patterns forming, but yeah. 13.5 on top.
There's a lot of stuff here that policy-wise kind of was offsetting what the Fed was trying to do, right?
To an extent, yes. And so from an investment perspective, it's positioning in areas that still have support, while the monetary side will be more restrictive.
Okay, so does that mean that investors are willing to bet on like infrastructure build out, maybe like a tech infrastructure build out, or where is the money going right now?
It's a wide range. So if you look across it, we're seeing investment into roads, rail, airports, as well as more into digital infrastructure as well. So it's a huge area of different places where there is investment into it. So if we're looking at companies that stand to benefit from increased investment based on those policies, you can see it going into three main areas. Raw materials and the components that are used within the manufacturing perspectives. Then there's also the technology development and the companies that benefit from that, as well as the companies that stand to benefit from the actual manufacturing and services within the products and services areas.
Your PAVE ETF is having a pretty great year. It's up about 16% right now, which is ahead of the S&P 500 and significantly ahead of the broad industrial category, which includes the rails and the airlines and such. Where is the strength coming from in particular for this fund?
So obviously PAVE is very broad-based. So we have
the top of the channel on TUP.
Number
It continues.
of sectors. It's not just
Expect
industrials.
that.
We do include a large amount of industrials, but it's also materials and a small amount of technology. And so we're seeing a larger amount of support within the companies. Obviously, they do have that fiscal support coming through. Yeah, so like certain of them, for example, Eaton, they have been mentioning a lot of support coming through from the Inflation Reduction Act, and with building out a lot more projects relating to particularly clean energy transition.
Okay, so this is an interesting approach because you've got some of
Down
the
on these
more
calls,
kind of traditional cyclical components that
there you
show
go,
up
Fidelity.
in this ETF that have held on very well.
Wiki.
The other big winners on the year, just kind of looking from your guys' suite, are going to be tech focused, whether it's like AI, even some of the metaverse stuff is in there, generally autonomous and electric vehicles. So that's kind of the more high beta category though, but do you still see flows finding their way into those growthy tech areas too?
Yeah, Yeah, definitely. So we are still seeing a lot of interest in the artificial intelligence space. We're still very early days in the adoption in that area. And so we're not yet at the stage where it's making money for companies, but they're still needing to spend in it. And in order, that's essential to be profitable and competitive longer term. And so there's a huge increased interest within those spaces. Thus far, the most interest has been in the semiconductor space because that's the first place where there's the increased profitability area, but it also is going to spread down into a lot more software as well as more technology-focused areas broadly.
All right, thanks for the update on what you guys see in, from your perspective with the big suite ETFs across a lot of these different styles and sectors. But PAVE holding its own, a classic kind of infrastructure and U.S. cyclicality working well. Thanks, Michelle.
Look at that chop.
Absolutely. Michelle Kluver, portfolio strategist at Global X ETFs. All right, not just tech beating the market this year.
What
Some
the
of the
heck?
core development plays.
Okay,
for the
totally
US
reversing now.
economy and infrastructure.
I didn't take profits
Got earnings
because
coming up. In the
why would I?
chart master segment, we're going to take a look at Wells Fargo, United Health, and Progressive. A couple
Didn't
interesting
make
charts
it.
here, so don't miss it.
I'm out of those calls. Man. Choppy. We're taking some profits here. We just, yeah, this is pretty bearish. Mixed with just maybe some chop. Should have taken some profits, I suppose, and stopped the rest, but yeah. Odd place for it to stop. That just means the bulls are in control, not completing the cup. Look at that wick to the VWAP for TUP. That's crazy. Like a 6% wick. Overlapping NDAs. GME down 3 1/4.
To the company's pocket. You can see adjusted earnings this time around are expected, however, to rise from last quarter to around $1.62 or around $1.62 cents a share. Revenue is expected to rise to $15.46 billion. But the company has made some progress, no pun intended, that it hopes to be able to capitalize off of, looking at its product portfolio. Also, it's seen some strength in its vehicle and property businesses, and then it's got solid retention, and also the company's had a greater focus on marketing those products as well. So again, revenue is expected to rise to $15.46 billion, and then we're looking for adjusted earnings to rise from last quarter to around $1.62 a share.
The revenue climb, again, pretty minimal, but still at least it's positive for this one. It's in the right direction. And it sounds like a few of the businesses are doing pretty well from the auto side and the insurance, but to your point on the last quarter, maybe it's a little bit more complicated than just taking the premium and moving it down into the bottom line. Here's the thing, though. The stock found its legs after that report, even though it dropped on it at first, Rick. It's been straight up since.
Oh, yeah, you are right. It's like when you said a rip-roaring quarter, I believe. We're up like 30% from those lows that we established right there. And it was looking pretty dicey for those earnings for a little bit here. But we very quickly recaptured that level. Steep trend line to the upside here that topped out right around the 144 level. Since then, though, things have slowed down a little bit here. We've drifted to the side. We broke through this upward sloping channel here. Now we've got another, upward sloping trend line. Another trend line here in play, this white dashed line, a little more shallowly sloped, but still up for sure, still trending upward. And I'm a little curious, though, because we paused at resistance, we've had a strong rally upward, and now we're not really able to make it above this 144 level with much conviction. At the same time, we're showing bearish divergence on the RSI. Momentum is slowing. The price is making a new closing high. RSI is trending downward. We also failed to break above that overbought area. That would have been an encouraging sign for the bulls here. So now, we are at a point where we're at resistance and momentum is slowing. We're moving above this volume node near the 142 level, this area of heavy trading kind of centered around this area here. So if we do keep moving to the upside, we could see some fast moving prices. I would be really curious to see if we did keep moving to the upside, if we were to fill this gap near 140. You can see all the way over there near you, that was a large gap that we had there. Gaps look to be filled in trading here. Not saying it's going to happen for sure, but that would be an interesting scenario to be on the lookout for. To the downside, a little bit of a confluence right there that we've got. Our yellow 21-day and our new trend line here coming in right around 141. That would be one area to watch as well to the downside.
Seems like worst case scenario, you've got a pretty well supported stock at this point, given what you just pointed out, the confluence of the trend and the moving average, and then a lot of volume just up here now at 142 bucks, given we spent what, like 2 weeks consolidating around $140. So, I mean, a sleeper of a chart and a company that has kind of gone overlooked. We did talk about it when there were a few natural disasters earlier this year and some of the ramifications of that, but I guess lost sight of it since, and a big comeback here on the chart. One more on the insurance category. United Health also has gone through some ups and downs and how it's going to deal with Medicare pricing, but generally a pretty stable and reliable trade. What are they saying for this, Renita?
Well, you're right. It's a stable and reliable trade because it's also consistently beat earnings estimates. And we will see if it'll continue to do that.
Yep, that's the trick.
Yep, that's the trick. At this time around, it's expected to see adjusted earnings of $6.33 a share on revenue of $91.43 billion. Now, analysts, of course, they're going to be focused on the healthcare business, specifically growth in community and state divisions, and then employer and individual domestic divisions as well. And then, of course, we're going to look at how the rising cost of premiums have impacted this company, if they've been able to absorb them into some other area of the balance sheet. And if they've been able to actually see what else they could do, or if they've increased any of their product offerings as well.
Yeah, this is not very high expectations, revenue shrink and earnings. So as far as like the market's expectations go, it kind of feels like this is the worst one of the three.
Possibly. And that is a different thing when you think about this particular company. Now, it's still possible that it could beat the earnings estimate.
Yeah, of course.
But we'll also look to see what the expectations are for the following quarter and if they may cut guidance for the full year as well.
Yeah, if things
that
get
is
worse,
some chop.
maybe that's on the table. I mean, it's kind of interesting how strong the chart has been in the last couple of weeks going into this, Rick, considering that investors are expecting this to take a hit from a year ago fundamentally and financially.
Another chart where not a ton of net movement over the past year, but some important technical developments here. Take a look at this blue dashed line here, starting with those yearly highs. Long-term, shallow downtrend. Broken though. We moved to the upside. We had a bit of a range that we carved out right here with some lows near maybe about 500 or so, some highs around 514, 515 around that area. We had a nice move up when we broke beyond those levels. And you can also see here, this is a volume node that formed in this area, an area of particularly heavy trading. You know, and this is what you kind of use this for, is to find areas of potential support and resistance here. So this was an important area that we were able to break out to the upside. Now we're forming another volume node right around this area near maybe
some more.
25 or so. Smaller than our last one though, not as heavy here, but still notable. You can easily see the spike where the trading is happening. We didn't take out our old highs yet though, from back in April. I believe this over here, this peak that we saw right here, it topped out around 530.45. So that would be a notable area to watch if we do keep moving to the upside. But you know, the trend is up. The trend line is up, moving averages all trending upward, sloping upward. We're above all three of them. RSI, not really giving us many clues here, but just, you know, kind of following the price action, making new highs with price here. So it would be nice if, for the bullish crowd, if we were to cross into the overbought area and break above that resistance at the same time. So further areas to watch here. 530.45, like I said, then 538. That was a frequent stopping point for price here. It may look like kind of a mess when you're a little bit zoomed out, but if you were to look closer, you would see frequently price stopped right around that area in terms of opens and closes here. To the downside, 514. Like I said, this range, the highs that we established there, that seems like a reasonable point to look for some potential support.
Seems like a chart with some pretty good short-term momentum, and it does seem like this was the right line to have on it, because when it got to the upside, it basically did a single retest, held, and since then pretty much been up and away trying to carve out a new uptrend. So a good one to look for here, maybe if they can beat expectations and come in a little bit warmer than where analysts are expecting some declines for United Health. Thanks, Rick, on the charts, and Renita on the numbers. When we come back, let's talk some more earnings as we are in the season, fast and all, reports, and it's up. One of the big winners in the S&P 500 today. We'll get the rundown on the earnings when we come back.
Dude, look at that chop. What's up, Lords? Finally, Carvana's coming down some. AMC, now RAD, 0.5%. Run is down 2.6. Charge point just getting the market caps sucked out of it. As it should, it was way overvalued. Still way overvalued. Well, I should have gotten puts on. Joan? Yeah, Joan's looking good. Down 5.5. Yesterday was up like 20 something.
market taking effect, that the bulls had a strong run once the Fed started to really put in for the higher for longer phrases, as opposed to talking about the potential for another hike, some of this dovish language. I mean, we're looking at a new war breaking out. We're going to have to see how this holds forward, but I wouldn't be surprised if there was a Christmas hike, a nice bow there on the ribbon, so to say, or a bow on the package of a hike, and see that come into the end of the year. But either way, the Fed's got a stronghold right now on the market overall, and the bulls are seeming to like this where we stand right now.
Okay, so in terms of what we look at going forward, Alex, I mean, I feel like this was the big print. We've already heard the language from the Fed speakers. I mean, to your point, even though I would happily argue that maybe this does complicate the picture, the bottom line is the Fed officials don't think so. They haven't this past week taken any of the opportunity to sound hawkish.
It seems as if the Fed is kind of following the same plan that they have when they don't have a very clear path that they're on as they're sort of working towards their off-ramp. Whether we get 25 basis points or not, I think we're working that direction. That's consensus. They don't want to package themselves or paint themselves into a corner. And so we had sort of a hawkish takeaway from the actual meeting, but the words after have sort of moved us back into sort of it could go either way territory, if not leaning a little bit dovish. I think the November meeting will be interesting because it will solidify whatever we do get in December more than likely. We'll paint ourselves towards that direction. And there's still plenty of time for that to be disrupted by earnings, geopolitical events, whatever it may be, jobless claims, labor market conditions. So I look at it as Fed speakers are still going to be important. They're going to kind of shift our odds one way or another. But I don't see inflation as the primary concern at the moment. I think earnings is going to be a far more important picture and something to focus on.
All right, well, it begins tomorrow morning. Thanks for the thoughts, Chris Perkins, Alex Coffey. Nice way to close out our show here on Morning Trade Live. Thank you for joining. Trading 360 with Nicole Petalides is up next. See you this afternoon, 2 p.m.
That BWAP chop. EU closed in 30 minutes. GME's down 4. RAD is down 11. We broke out of that channel. It's filling the gap, looks like. TUP. TUP's up 4. Still within this buying channel. Buys rallying a bit there. I want to see it break out of this channel. Otherwise, I'm not believing it.
We did have to digest the Fed minutes from yesterday, as well as the 2 inflation prints that came in a little hotter than expected. The Russell down 1.3%. Dollar 106.10, so that's gaining slightly. Gold pulls back $2, 18.84 a troy ounce. Crude oil 84.76, and we have Bitcoin 26,715. Down 1/3 of 1%, and the Sam Bankman-Fried trial goes on here in New York City. In the meantime, we're looking at today's market, and Jenny Horn is with us, markets correspondent here on Schwab Network, taking a look at the very latest on the UAW strike, and obviously expanding, and that continues. Tell us more.
Right as we enter week 4, I think technically we are already in week 4, but it doesn't seem like developments are moving in the right direction, as we did see that around more than 8,700 UAW workers did walk off the job yesterday as of around 6:30 p.m. Eastern time. This shut down then Ford's Kentucky truck plant in Louisville. So the strike was called after Ford did refuse to make any further movement on its bargaining. The surprise move does mark a new phase in their obviously stand-up strike. Previous expansion efforts in the strike did occur at the deadline. They had been set forth in advance by the union. This move does come just one day before the 4-week mark since contracts expired at the Detroit 3. Now, President of the UAW, Shawn Fain, did say they've been crystal clear. They've waited long enough. But Ford has not gotten the message. It's time for a fair contract at Ford and the rest of the big 3. If they can't understand that after 4 weeks, the 8,700 workers shutting down this extremely profitable plant will help them understand it, is what he said. So this was considered a pretty major move, but it's amazing to me to see shares just relatively shake off some of these headwinds, perhaps because markets are somewhat expecting this. I mean, Ford is down around 2% today and pretty much down 2% across the board with the other Detroit companies. But just amazing to me that we're not seeing more of an impact, frankly, Nicole.
All right. Tell me more about what's going on is on the earnings front. We did hear from Walgreens.
Right, some more positive news, I guess. I'd say compare that to the UAW strike. Walgreens was objectively a bright spot in this market. It was a bit of a mixed picture, I will say, as far as their 4th quarter report went, but sales rose 9% year over year to around $35.4 billion. This was up 8% on a constant currency basis. Adjusted operating income was down around 9.8% year over year. This reflects these lower volumes of their COVID vaccines and testing, partially offset by improvements in the underlying U.S. pharmacy, lower incentive accruals, and the strong international growth, as well as what they said was improved profitability in their U.S. healthcare space overall. Adjusted earnings still fell 18% year over year, reflecting again this 23% headwind from those just lower COVID vaccines. This is a company that's still reeling from very difficult comps when they saw obviously a massive pandemic benefit. But all in all, seems like the street likes what they had to say, and I will say that Walgreens has been a considerable underperformer on the year. It was down 40% into today's open. So perhaps this low bar that was set forth just means that pretty much no news was good news.
Right, understood. Thank you so much. Jenny Horn, great to see you, markets correspondent here on Schwab Network. Thank you. Let's get some insights and news that's shaping the markets. For that, we welcome in Michael Ranking is with us, senior market strategist here at the New York Stock Exchange. Thanks for being with us. So we got in yesterday and today, and we're seeing that inflation is hot, and it seems that from yesterday's Fed minutes, right, they were open to another price hike. They were concerned about inflation. While there could be downside risk to the economy, and that was highly uncertain, they talked about UAW strike. That too could slow things down. How do you interpret today's and yesterday's numbers?
Yeah, so yesterday's numbers came in a little bit hot, as did the headline number today. But core was in line with expectations. Right, we continue to see on a year-over-year basis, core continuing to decelerate, kind of moving in the Fed's preferred, kind of direction. In terms of yesterday's Fed minutes, right? If you think back to where we were kind of at the September timeframe when those minutes were kind of put together, it was a very hawkish tone by the Federal Reserve. That tone is softened quite a bit, right, over the last couple weeks. So I think those those minutes and the language there is a little bit stale, and you could even argue that the minutes read a little bit more dovishly than even kind of the press conference when Chair Powell spoke last month. If you kind of think about what we've seen since then, we've seen rates move just sharply higher, and you've seen multiple officials suggest that the moving higher of rates is tightening financial conditions, right? And the market is doing some of the work for them, right? So I do think that at this point we're likely on hold into November.
Right, and they did say they want to move carefully. That was another phrase that was used in yesterday's FOMC minutes, which actually came back in mid-September. It was even before that.
GME down 4.3.
September, it was even before we saw rates moving higher. But instead of higher for longer, maybe it'll just be high for longer. I was hearing that this morning, so maybe we'll be looking at that. In the meantime, we're kicking off earnings season. We were just looking at Walgreens. We'll have a lot of the banks coming up tomorrow. What are you looking for, and what are you expecting?
Yeah, so I mean, this is a pretty interesting setup. Like some of the buzz heading into earnings season, like it just isn't there, like we've seen throughout much of earlier this year.
Wouldn't want an engulfing candle on we the day that wouldn't.
Q1 earnings
great
cycle,
sign.
estimates had been cut really significantly heading in. You also had kind of depressed sentiment within the markets, and that kind of allowed markets to rally in the back end. Last quarter was different in that we had seen those the bar had been lowered over the last 12 months. But the market had rallied so sharply. It was kind of right after the debt ceiling. We averted the debt ceiling crisis, and the market had rallied so sharply that it seemed like even if they were beating estimates, that it would be kind of hard to clear that bar and kind of continue to move higher. From here, right? This is actually the first quarter. Well, I mean, we're estimates are still calling for a very slight decline on a year-over-year basis.
Right.
But with like typical beat rates, I'd expect us to actually kind of be up on a year-over-year basis. Right, and this would be the first quarter following 3 quarters of declines where we start to see earnings inflect a little bit higher. Right, the analyst revisions heading into the quarter have also slowed down. Right, so we're not seeing that. And then if you even think about kind of markets, with the rally that we've just seen this week, the bounce off of the recent lows, we're kind of in a much more neutral spot. Right, so if you think kind of look at the economic data, we've had a very strong quarter of economic data, right? So there's nothing to suggest that earnings are going to fall off a cliff. And if you start to look out at estimates going forward, just for us to hit the kind of 2% year-over-year target for 2023, we're looking at earnings growth in Q4 of up 8%, and then next year of 12%. Just given some of the uncertainty in the market. Those numbers seem a little bit rosy at this point.
Okay, but not bad because it certainly seems like it's going in the right direction.
Correct.
Today we are at 43.72 on the S&P 500. When we were looking to the downside, we broke 43.50. We went down near 4,200, which a lot of folks were looking at another threshold. Now we're at 43.72. What are you hearing for where the S&P is headed between now and the end of the year?
Yeah, so I mean, it's a pretty difficult spot. What I think we've seen is we got sentiment and positioning are really kind of moving the markets, right? So July, very extended to the upside. We can't, we worked that off, got short-term oversold right around the 200-day moving average at 4,200, like as you just mentioned, right? And now we're kind of bouncing right back into kind of the middle of that range. We're testing the 50 and the 100-day, right below 4,400 at this point, right? So we're in a neutral spot. It does seem to me like we're potentially kind of setting up, just another new range, 4,200 to 4,600. I wouldn't be surprised to see us kind of retest that kind of 4,200 level, sometime in the next couple weeks. But what I would potentially expect to happen is the seasonal patterns that we've talked about multiple times over the last couple years, the last year, does start to turn right around this time frame, typically. And I'd run some numbers, and if you look back, in years where the S&P 500 was up over 10% in the first half, right? Markets tend to end the back half of that year higher. There have been 17 instances post 1970. We've ended higher in 75% of the time by an average of 5%. If you actually look at years where Q3 was down, there have been 7 instances we've ended higher 6 of those 7 times by an average of 10%. Right, so you do have some historical precedent, and if you think about where kind of the professional investment community has been, they've been kind of underweight markets. So if we kind of do get a retest, and you could start to really see some of that performance chase into year end.
Right, and as you said, if we do test 4,200, things like higher oil or some headline risk, geopolitical risk, could probably be the catalyst for the downside. But then, as you noted, the range we'll watch 4,200 to 4,600. Thank you so much, Michael Ranking of the New York Stock Exchange. Thank you for being with us. Up next, it's the big 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Kenny Polcari standing by. He'll have the trades for Textron, Booz Allen Hamilton, and CrowdStrike coming up.
Might take calls. The channel breaks the upside. Might just wait for the full cup and grab a handle. Grab a handle, a jack, and say goodbye to today. Just kidding. GME down 4.5. Just weird low volume melting down. See, pretty flat. TUP back to VWAP 1.7. And WeWork down 6.85. It wants to fill this gap. RAD down 7.8. Buy at the top of that channel now. Maybe a good spot to short even. It's just so choppy, man. No direction yet. There, it's breaking that bit to the upside. I'm waiting for the full cup, the handle. Beyond down 7. Retest of that high. Just unconvincing for bulls, though. This looks like bears building liquidity, maybe. Space down 5.
But Ben, go ahead. Show us the chart and take us through what you're watching carefully.
You know, Nicole, Kenny's got his eye on something that's very important. It's the upper extreme of a range that we've been in. And in this bullish pattern, Kenny's not the only one who's looking for a breakout, right? The longs, those who've been participating with the trend, are looking for continuation, more likely than change. The trend is your friend. I don't know how you want to put it or what you want to call it, but a breakout is ultimately, again, follow through of the pattern that we have been seeing. Now, let's begin first and foremost with the most recent price activity we've seen over the last few weeks, because Kenny was talking about range-bound price activity, and you're going to see that here. This is a great example of what I look for. The two separate phases of development. In this instance, overlapping, rotational, very random, limited in terms of conviction, kind of a wave pattern, just price isn't really going anywhere. We have a very well-defined upper and a lower extreme, and then we have a pivot which gets established. In this instance, we're talking 81 to the upside, 75 to the downside. Do the math, it's pretty basic. We're talking right around 77, 78. It's the key area to watch here. And again, in terms of that lean, bullish or bearish within this range, in this 15-minute time frame. Taking a step away from this range-bound type price activity, Nicole, I always say, when in doubt, zoom out. And if you do that, you're going to see also what I was talking about. Another good example of, well, for one, that horizontal phase that we were just talking about, and then how you shift into that vertical phase, what Kenny's looking for, and how we've gone into this horizontal phase again. Kenny was talking about this triple top, these areas where the market has stalled out, retested, and then revisited. But again, with that migration of value to the upside, we're expecting continuation of that pattern to play out, and you can see that this has been going on. This pattern repeats itself multiple times over and over again in this trend environment to the upside, in this instance going all the way back to 2020. So you can see why Kenny and others think we're going to get a breakout. This is the triple top Kenny was just talking about. You can see that actually coincides with the high that we saw back in 2021 as well. So there is some resistance up there. It is an area that the bulls have struggled to get up above. If we do see energy, conviction above that area, they're going to be looking for a new area of value to form at a higher level in line with the trend we've been seeing. This is very much bottom left to top right. Kenny, I can understand the bullishness.
Right. Understands the bullishness. And what's interesting is you had that candle where we moved higher on the earnings. I wonder if earnings season will also help a name like this. Well, you have the background of just all the geopolitical turmoil.
Well, yeah, and I actually think the geopolitical turmoil is what's really going to be the driver here. Certainly, earnings are going to make a difference. But I think it's, these two plays, Booz Allen's going to be the next one. That's another name in the defense space, and it has very much a similar pattern, which is interesting if you look at it. And the way that I'm looking at it is these range, right? Both upper and lower, as we'll see in a minute when we put the chart up there. But it also has been testing the upper range now 1, 2, and 3 times.
And it hit a high.
And
Booz Allen hit a high of almost 128 just recently. So
correct. And listen, it's backing off a little bit today because the market's a little bit weaker based on what we saw this morning. But I think the defense space is going to start to outperform.
Yeah. In fact, it's turned into the green since your last track. I don't know where it was, but right now it's up 0.25%. Booz Allen Hamilton, take a look there. Ben Lichtenstein.
You know, as I look at shares of BAH, first and foremost, I got to be honest, when I look at these symbols, part of me was like, Kenny, come on. I mean, can't you come up with something better than this? But then I opened up the charts, Nicole, and this is exactly what I look for, a very well-defined trend, migration of value to the upside, and the kind of chart, the kind of price activity that jumps out at me and just screams, yo, you, look at me. It's so well-defined. You can see the staircase-type pattern playing out. We're looking at 5-minute candles. We're going back a few weeks to when we were down 106, 107. Really easily identifiable areas of consolidation that have formed. Again, there's a more granular chart, so we don't want to give this too much weight, but even as we step back, look at what's going on here. Another similar situation playing out where you can see areas of consolidation which continue to form at higher and higher levels. These are daily candles. I also wanted to bring your attention here to the move that's happening right now, again, as we are currently breaking out. The question is, at some point, are we going to find a stopping price where we form a new area of consolidation at a higher level? But you can see the high conviction associated with this move through 115 and then to the upper extreme of the range. That goes back to the highs that we saw back in July. Let's take a step away from the daily candle chart. I want to show you what's going on here as we bring a little bit more time in and take a look at weekly candles. This is almost identical to the 5-minute candle chart that we looked at, right? But this goes all the way back to 2015. Look at this, Nicole. Kenny, you picked a winner here. I have to say, I mean, this is a very well-defined trend environment to the upside, migration of value, and then again, just want to point to the real high conviction associated with this recent move up. This is exactly what Kenny's looking for in terms of a breakout as far as our last example. Again, and upper extreme, trending higher, conviction, energy, higher highs, higher lows, is rewarding the long-term bulls, that's for sure.
Right, and you know, I feel like, you know, people who follow, they used to jump on board for the Yankees. You're picking a lot of winners here.
Yeah, but look at that's a perfect chart. It reminds you of Aerospace Stairway to Heaven. I mean, look at that chart.
Beautiful. It really is. It is a beauty. I agree, and I like how Ben marked it there and hitting the highs, and just like your next one is hitting a high too. We're looking here at CrowdStrike, and that hit a high just recently at 190.
Right. So again, now that's in the tech space, right? That's in the cybersecurity space, right?
Important.
And it's very certainly it's very important now. Again, considering what's going on in the world and the role that cybersecurity plays. And this one is very much. I'm looking at that same type of a pattern where it's been trading very tight in this range and appears as if it's ready to break out. Again, I also like the space, cybersecurity, which I've liked all year long. I own it. I continue to own it. I continue to look. I'm hoping as well that this one breaks out.
Yeah, and you know, we just had to your point, all the cybersecurity. We just had 23andMe. I saw a report that just recently had a data breach, and so and when Russia-Ukraine broke out, cybersecurity was huge.
And even what they say, this latest conflict in the Middle East, that there was some cybersecurity stuff going on there as well to kind of jam the systems.
Sure. Ben, take a look at the technicals on this one, please.
Absolutely, Nicole. If you like the look at BAH, you're going to love this chart because another well-defined trend environment to the upside, taking a look at what we've seen. And I wanted to just take a look because the last time we pulled up shares of CRWD on this show, we were talking about areas of consolidation that formed. I'd identified this area right here, which had formed around that 166 level, and we were looking for that continuation, right? A breakout, follow through in terms of the pattern that we had been seeing, that uptrend. And, well, let's revise this chart, right? Because they're ultimately ongoing. This is something that you have to constantly revise and provide revisions to. And in this instance, look, that area of consolidation we had just identified as 166 provided the catalyst, the catapult to continue to form new areas of consolidation at higher and higher levels, supporting that working assumption that we are trending higher and no rejection as of yet in terms of that expectation that we're going to continue to form value at a higher level. We are now in a vertical phase on the daily time frame. You can see that comes in the form of big green candles to the upside. Energy, conviction. We're in a breakout phase, simply put, as we rip out and through this 166 balance that we were forming. But again, in line with the trend, right? So this was expected in many ways. That's what the bulls were looking for. Now, what are they looking for? They're looking for that consolidation to form. Again, a new area of value at a higher level after this high conviction breakout. So let's step back one more time. I want to show you what's going on as we take a look here at the daily candle chart, because I always say, not only is this method, this way of looking at price activity important in terms of identifying trend, but it's also important to identify when trend is no longer present, right? In this instance, CrowdStrike, talk about looking at the trend to the downside that we saw into the beginning of this year when we bottomed out around, well, right around that $90-$100 level, forming value around 115. Current area balance that you were forming. When we were bouncing around 115, you should have been looking at 185. Look what's happening here. We're now taking that area out with conviction to the upside. This is potentially reversing a longer-term trend as well, not only showing a very well-defined trend on the more intermediate time frames also, but you can see the significance of this up move here in terms of potential bottom pattern forming on CRWD, Nicole.
Look, and the catapult was the word he used. And sometimes when you see that big move really quickly, I don't know how you feel about that, because they're just in month to date, it's up almost 13%. 3 months, it's up 26%. One quick thought, and then today is big three with a cherry on top. And the next one, I don't know. Ben doesn't have a chart for this one because we're out of our three. We met our quota.
Right.
Also, he might not like your next chart
He
so
may
much
not.
because it hasn't been a winner. Just any quick thought there, and then get to C3 AI, please.
Yeah, well. So just to the point of CrowdStrike, again, I'm just strong on it. I'm bullish on it just because of the sector it's in and just because of what's going on in the world. And certainly the chart pattern makes sense to me. Now, C3 AI, right? It's an artificial intelligence name. It's a name that I like. I own it. To be fair, I do own the name. But it has pulled back a lot. It's pulled back nearly 50%. But that's when the market started to get nervous about the Fed. And so what did they do? They went right away to these outperformance. Look, that stock was up nearly 320% this year. They took 50% out of it, right? They took it right down from the 52 level right back to 25, where it seems to be building a base. And look, I like the space. I like artificial intelligence. It is certainly not going away.
Where do you think it's heading?
So I think it's just about to break out, and it's going to go back to the mid-30s, maybe 35, 38 level from, I think right now it's at where, 26 or so.
Right, today it's at 26. The high back in June was 48.
Right, so I think it's going to go, I think right now initially, the next move, I'm looking for it to go into the mid-30s.
Okay, so we'll watch
But I like
for
it, so it's a
that, 'cause
long-term
it has
name
been
for me.
beaten down, to your point. I mean, it did get rocked recently, but still a winner year to date, up 133%.
Right, exactly.
All right. Ben, we're not having you chart that one because you already met the quota. You already worked hard enough on 3 charts. Kenny Polcari, Slate Stone Wealth, and Ben Lichtenstein on the charts every single day for the big 3. Thank you both very much. Coming up next, the spotlight on solar energy. Sunnova's CEO will join us live here at the New York Stock Exchange. Get charged up for that topic next.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have developing stories this morning. Kevin Green is with us, senior markets correspondent here on Schwab Network. You're taking a look at Delta earnings, reporting this morning. Your thoughts?
Yeah, definitely. I think it was a little bit of a mixed report here, Nicole. We actually did see the stock pop around 2% in pre-market trading, but it has backed off a bit, and it's down almost about 0.8% in the session here. But they did actually surprise the street when it came to its profitability. They actually did see profits soar around 60% for the quarter compared to what we saw for last year, which is why we saw that pop in the early morning session. But when you look at their guidance, they did actually provide guidance that was actually below the street's expectations and at the lower end of its range. They're obviously citing higher jet fuel costs, and they also may see and experience a little bit of a drawdown when it comes to international travel due to some of the geopolitical tensions that we are seeing. But international travel has been actually a very strong point, at least for this quarter. They actually saw that really move to the upside when it came to capacity numbers as well as profitability. And they also saw their flight occupancy at around 88% for Q3, which is also an increase of 1% on a year-over-year basis. But once again, they really kind of do focus on the business traveler in itself. They did actually talk about the business traveler, and they're at around 80% of its 2019 levels when it comes to that capacity. So that's a nice trend to be able to see and try to recover that type of traveler, because they are usually a frequent traveler that does provide a significant amount of profitability. So let's see how the stock's going to end up for the remainder of the session. Once again, kind of a mixed report when you're looking at guidance, but nice bottom line numbers when it came to profitability.
All right, thank you for all of that. And then I want to turn your attention quickly over to oil, which right now is up about 60 cents. A quick thought there.
Yeah, we're definitely continuing to see a lot of volatility in the oil space and just the energy sector in general here. We did have some news earlier this morning that Israel did strike 2 Syrian international airfields, if you will, and that did cause a little bit of a rally in crude oil. But we are seeing it back off here a little bit after we had the EIA numbers that showed a significant buildup when it came to crude oil inventories. And that's something that the market's really been trying to balance out. Are we seeing a little bit of a demand destruction when it comes to the consumer over the geopolitical tension? So this is kind of causing a lot of energy traders a little bit of uneasiness here in the near term as we try to navigate these waters.
Yeah, Kevin Green, thank you so much. Good to see you. Senior markets correspondent, appreciate it. All right, we're going from crude oil to a different type of energy, and that is our spotlight, solar. Let's bring in an expert here live at the New York Stock Exchange. Happy to have him here with us today. John Berger, founder and CEO of Sunnova. Thank you for being with us. The ticker symbol NOVA, so people can look that up if they would like to do so. You know, an exciting time because a lot of folks are looking at a name like Sunnova and saying that it really has good valuation, that sometimes people just jump ship on solar in a big way, but you have a lot of great things that are going on with the company. Tell us about the current environment.
Well, it's actually pretty good for energy stocks, and what you look at for as far as what our business does, and just really simply, the utility rates are continuing to go up. And there's a lot of pricing pressures. It's not just fuel costs, but it's also interest rates, and a lot of other costs are pushing those rates up. It's a very inefficient system. It's a monopolistic system, a socialistic system, so it's very inefficient. So we're seeing those rates move up. Everybody sees it for their homes. And then we're seeing solar panels, batteries, inverters crashed down in price now. So it's really creating this value wedge that, yeah, as interest rates move up, take up some of that value wedge. But as that wedge continues to expand even faster than rates go up, we're actually seeing a lot more value. So on average, on a first-year basis, a customer is saving 20% on their utility bills, and they're more reliable with batteries, again, as those batteries go down in cost. And so when you look back, if you'd signed up with Sonova or one of our competitors several years ago, we have some customers that are saving 50% or more on their power bills. So it really is a great time to be in the energy business.
And, you know, it's nice that you mentioned the whole industry because it's a theme and how people can have that long-term sustainability and savings. And it's my understanding when I look through some of the analyst reports that you've been gaining some market share and things are going in your favor in that way. You also have a recent deal with the Department of Energy, a $3 billion deal. Tell me about that.
Yeah, so we're really focused on how do we drive more profitability, how do we increase the pricing, as I've said, and how do we increase the cash flow, increase liquidity. So this Department of Energy deal, what it's doing is expanding the base to be able to take in some customers that maybe don't have that great of a credit, most of which we were looking to expand anyways. And they're also taking a cost of capital and dropping it. Everybody's worried about the rates and moving up. So this gives a government guarantee on our loans up to about 90% of the entire capital. And so what that's doing is it's expanding the base, it's dropping the cost, and it's increasing our liquidity because we're inviting new investors that never invested in the asset class before in solar and batteries, and they're coming in because of this government guarantee. In addition, what we're doing is we're aggregating all these new homes and that we have solar and batteries and load management, EV charging. We're putting them all together and we're selling the power back into the main wholesale system and generating further dollars for our customers. We're doing this in Texas. We're going to do this in Puerto Rico because mainly of the DOE deal. So there is more here to do with this new technology, and this Department of Energy deal really helps us do that.
Sorry, and that's part of the VPP, right? That's part of the virtual power plants and the pooling of the customers, because that's been a concern as people want to switch to EVs or do things. The grids just are not ready for it, but you're doing this in a way that can move it forward. Just as people are learning about VPPs, virtual power plants, just explain a little more so people can understand that they can likely count on these in the future because they seem uncertain at this time.
Yes, so essentially what it is everybody will have solar, batteries, EV charger, load management, maybe generators, and you got them on all these homes and businesses, and you want to pool them together so that when each home maybe doesn't need as much of the power, that you can sell that power through a power company like ourselves back into the wholesale system to somebody else that does need it. So this is what's been going on for really over a century in the wholesale side. Now you as an individual can participate and be a part of the power company and get more money for your assets that you have in your home. It's very exciting.
And how do we compare here at home to abroad? For example, I just saw recently that the French government plans to increase renewable capacity, and that helped solar stocks overall. Where would you rate, I mean, the penetration and obviously the opportunity for companies like yours going forward at home? Maybe we're not even that far along in this, right?
We're at very early stage, but we're starting to get a penetration that's, it's not infant, it's not nascent anymore. It's starting to get to be a real business, particularly in some states on the East Coast and the West Coast and the islands in the Caribbean and the Pacific, Hawaii and Puerto Rico, and Texas is booming for us now, in Florida. So you're right, we're starting to expand out. And I think, it's really frustrating to see the stock price perform as the way it has over the past couple of years or so, certainly over the past year. But the earnings, if you go back to when took the company public here just a little over 4 years ago, if you look at guidance at the end of the year that we've laid out, that's about a 700% increase in EBITDA over that period of time. And the stock is right below the price again. So there's a lot of compelling value out there. And there's the fundamentals, and then the government, as you mentioned, with France, but also obviously the Inflation Reduction Act with the United States and then China and the rest of the EU. All that's very, very positive, and the fundamentals are there. Again, utility rates moving up, solar equipment moving down, creates that value wedge, that savings for the customer. it just needs to be sometimes, I think, just a little, take a step back and really look at what's going on in big
yeah,
picture.
understood. Because you do see value in this kind of company, and some of these companies have been beaten down, maybe a little baby out with the bathwater. Thank you for explaining all of that and giving us an outlook. Great to see you. John Berger, thank you very much, founder and CEO of Sonova. Coming up next, the disruptors. George has got his eyes on Viva Systems. So it's rallied back over the past week. He'll give us some details next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. It's time for the disruptors, and George Sillis is here, senior markets correspondent, taking a look at Viva Systems, which I see has been running up of late. Just in the last month or so, it's up about 7%. Though at the same time, I know you're going to tell us all about this. At the same time, I'd love to hear, there was one article that talked about the recent short interest too. So tell us all about Viva Systems.
Yeah, I mean, if you look at Viva Systems, first off, year to date, it's up about 30 or so %, but it's an interesting company from the standpoint of what they do. Essentially, it's a software as a service company that focuses on healthcare information, particularly in the life sciences industry. So it basically provides research and clinical trial data, centralized point of sale from the standpoint of CRM or customer relations management, if you will. They also provide, clinical trial support for biotech companies, food companies, which are bringing products to market, but they also supply their technologies to the chemical industry as well. It's sort of like the Salesforce.com of the life sciences industry. And if you look at the market share that Viva has in the respective industry, it's about 80%. So they have an effective monopoly in their respective industry space. Now, if you look at the overall profitability profile of Viva, it's actually quite a profitable company, about 24% net income margin on 70% gross margins. And some of the analysts are rather constructive on the stock still, Nicole, with KeyBank. If you look at their price target, they actually raised it to $230 from $220. And that's a modest increase compared to the current price on Viva. But I think if you look at the commercial cloud elements of Veeva Systems, they do provide support in terms of clinical research, bringing biotech and pharma to marketplace, but also supporting the marketing aspects of drug sales. If you consider that component of their business alongside supporting academic research in the life sciences industry as well, it's becoming really the sales force of healthcare industry. Now, some of the short interest on the stock is there because if you look at the forward multiple of this particular name, it's trading around 50 times earnings. Now, in and of itself, it wouldn't be bad considering a stock that's trading perhaps at 25% EBITDA growth, but this stock is only growing right now based on estimates around 8%. So I can see why the shorts are also on top of this one, considering the stock has moved about 35% higher on a year-to-date basis. It's trading at a little bit lofty valuation. I can see perhaps why some of the analysts have increased their targets, but if their targets have been increasing at a modest pace versus more of an aggressive pace.
Yeah, thank you for all of that. I mean, when you see those improving fundamentals at this point and some positive comments, how would you go about an example trade then? Because you mentioned how it's been a winner year to date, too.
It is, and it's been growing its profits, Nicole, but at a modest pace. And if you look at the trend in the stock, it's been modestly improving over the past 6 months or so. The stock is, quite expensive, over $200. So what we can do is looking at the earnings profile of the company. They're expected to report in late November. The stock is quite expensive and it doesn't trade a lot of volume. So what we could do in this case is place a long call diagonal. We're going to go out to December with 64 days to expiration. This is going to be after earnings. We're going to buy the $200 call option. And then simultaneously, we're going to sell the November, which is, again, in the nearer months, the 230 call. So we're going to sell the out of the money call and then buy the in the money call with a little bit more time frame to expiration. Altogether, this would cost you about $21 a share or $2,100 a contract. But looking at the current price at around $217, you basically have $4 to break even, which is $221 by December's expiry. And what's nice about this trade is that the November contract, which is the 230 that we're selling, will expire prior to earnings. So effectively, if the stock does move on earnings, we'll be out of the November contract. And again, assuming a trader holds the December contract until expiration in 64 days.
All right, thank you for all of that, and good luck there. We really appreciate it. George Sillis with our Disruptor every single day. Thanks for explaining that. Coming up next, our panel is taking a look at Domino's Pizza, the earnings. The experts are here to break down some of these numbers for us next on Trading 360.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. It's time for the 360 round. Domino's Pizza. Well, we're looking at this one because the revenue fell short of estimates, but the stock doing okay today. I want to learn more. Our panel is ready. Our experts are here. Nick Setien, Managing Director, Restaurants Equity Research at Wedbush Securities, and Andrew Charles, Equity Analyst at TD Cowen. Thank you so much for being with us. Thank you both. Nick, start with your thoughts and take on Domino's Pizza and how it could, what you learned from Domino's, does this also reflect for other food companies like this one?
Well, first, thanks for having me. It's all about, positive transactions in Q4 and hopefully accelerating from there. We have pretty specific drivers of accelerating transaction growth, going forward in an environment where transactions are very hard to come by for restaurants across the board. And I think that's the bottom line. And so the question now is, can management execute towards those expectations?
Understood. Okay. Andrew, what are your thoughts? As we did see same-store sales down, international was a little better. How'd you feel about that?
Good morning, Nicole. Similar message as Nick, everything's about to change. That you are seeing this quarter the benefit of a loyalty program revamp they put in place at the end of the quarter. And then obviously the long-awaited Uber partnership that's still on track to kick off by the end of 2023. And so, this is a name where we have a high degree of confidence in the ability between self-help as well as the Uber partnership to really help drive above consensus same-store sales in 2024.
At the same time, Andrew, as I look at this, the amount of price rise that it's been putting out there, prices were up 3.2% from last year's period, and Domino's, now the prices are rising slightly less than 1%. What does this mean for customers? There was the loyalty program, which has given it a good pop here. Are these the kinds of things that could help Domino's going forward, Andrew?
Domino's, just given the nature of the pizza category, which is highly promotional, they're going to have to be pretty tempered, when it comes to pricing, which should be okay because, they did talk about how their food basket, their commodity basket is seeing signs of disinflation, is easing for them. Looking ahead, I think you nailed it, that this loyalty program, the ability to be more tactical around that, is their opportunity to pass on more discounts as they see fit. And I think, for instance, the emergency pizza they launched late last week is a great example of that, as a kind of a buy one, get one later initiative that they can really be a lot more aggressive with value should they choose to, and encouragingly in a more digital friendly way, as you have to be a loyalty user to take advantage of that as well.
And so we heard briefly about the Uber offer, and so originally, Nick, it was exciting for Domino's because they were doing their own delivery and actually was an outperformer because they were doing that and they didn't have to subsidize or pay any fees or share anything. But maybe Uber is a good thing or not, Nick?
Well, it should be. I mean, if you look at some of the peers out there, we're seeing 15 to 20% third-party delivery mix. And so if, Domino's gets anywhere close to that, which they should, over the next three years or so, even on an annualized basis, that's going to be a, 2% plus type of contributor with just, Uber. And so hopefully down the line, they also roll out DoorDash and can capture that full opportunity. So it should definitely, be a good thing. It gives us incremental visibility, again, in an environment where visibility is very limited across the restaurant industry.
Right, and U.S. growth basically struggling some, Nick. Tell me about some of the other names. I mean, what kind of rating do you have on Domino's Pizza, and do you have buy ratings on some of the competitors in this casual dining or fast food type of landscape?
Yeah, Nicole, I mean, Domino's is one of our top picks, along with Wingstop and Chipotle. Ultimately, to me, it's going to come down to relative value. And the names that have company-specific, drivers that can deliver against expectations in an environment where, again, there's very limited visibility. There's a number of headwinds that are well documented. And so, Domino's, along with, Wingstop and Chipotle at the moment are my top picks.
Oh, okay. Okay, so I'll add Wingstop on there. So Domino's, Chipotle, and Wingstop among your favorites. But we did see same-store sales here at home dropping. And so with that, Andrew, where do you rate Domino's and some of the other players?
Yeah, we like Domino's. We continue to like the story there and like the turnaround prospects for 2024, balance between Uber Eats as well as the self-help initiatives they're putting in place. They're going to be a lot more higher magnitude and more aggressive. You know, in terms of our pecking order, we like QSR, Restaurant Brands International, is our top pick. Wingstop is our number 2, and then Yum Brands is our number 3. We definitely believe that you're going to see continued trade down into the quick service category as a base case as consumers increasingly seek more value. You know, this was very apparent in the month of September as we hosted a panel recently on fast casual that noted particular softness in the month of September. Early to say on October, but it seems like the first week or so of the month seems like it's getting a little better. You know, I don't want to take that to the bank, of course, you know, for the industry, but I still think it's fair to think about value really reigning supreme for the foreseeable future, and trade down in the industry is certainly a fair base case.
Yeah, just a few seconds left. I mean, really like 10 seconds. But Andrew, you mentioned Yum Brands, and I always think abroad, and I think of China. What do you see there?
Yeah, with Yum, it's really about Taco Bell. You know, it's about a third of the operating profits for the U.S. business versus China's around 15%. So, you know, in the 5 seconds that I have left, I would just say that, you know, we think that Taco Bell will overshadow what we're seeing in China, should there be any difficulties there. I think the China macro narrative and competitive landscape a lot more negative for Starbucks than it is for Yum.
That was excellent. I really appreciate you getting in all of that, both of you, as quickly as you did, because we got a lot of information. I learned a lot, and the viewers are always thankful. Nick Setien and Andrew Charles, thank you. That's going to do it for us here on Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange every single day, 11 and 2. I'll see you later. Fast Market is next.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform, plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
these strikes and how that could impact some of their overall updates in the coming days regarding these strikes and how that could impact some of their overall demand. But it seems like they just basically said things will persist. So it wasn't like sentiment was super exciting, but it wasn't like it was disappointing either.
Jenny, one of the headwinds there is the higher fuel costs, as you mentioned there. But then I think another component that maybe some analysts are concerned about is that increased capacity. And if you look at the ticket prices year over year in terms of how they're stacking on Thanksgiving and Christmas, I think they're down 12, 14% respectively, which suggests that, is that higher capacity, is that the primary result of those lower ticket costs that we're seeing from the airlines?
Yeah, and that's a really good point, because that was something they mentioned, the fact that that additional capacity has had them rethinking a lot of their prices. And I was actually reading the way that they are seeing increased demand for some of these premium seats. They've seen business class or economy, or premium economy start to surge. Well, then even their low fare seats are starting to uptick. So I almost think that speaks to who they're serving. I think Delta typically serves, a transient traveler or a more high-end traveler. They're typically a little bit more costly. I just know from my own booking experience here in Chicago. So they are definitely seeing these customers continue to come back to their higher ticket costs. But I think that's a more perhaps insulated consumer to some of the overall macro headwinds. I think that we'd get a better look at what the low fare airline travel space looks like a Southwest, say, or obviously a Spirit. So it's interesting to me because I think they remain somewhat insulated just because of that more luxury, more high-end consumer that seems to keep going back to these premium seat offerings.
Yeah, shocking here, Jenny. Everybody wants a premium seat, and that's where they're making up a lot of the margins on that. But international business picking up, although they did see a tick down in some of the business travel. All right, great stuff as always. Thanks to Jenny Horn, markets correspondent here, breaking down Delta Airlines earnings. Nathan, I wanted to kind of get back into that discussion about the CPI data because I thought it was interesting. You saw, rises in everything, from rent to fuel prices, which of course isn't surprising. But the only negatives, it seemed like, were used cars and then apparel. So if you look at this, if you take out everything as far as the core stuff, you take out food, energy, and housing, right? That's what everybody needs, but they keep on wanting to take it out. But that's a problem, right, as far as sticky inflation at these levels. And I saw something just before we came on air that the new normal might be the 3% level, but the Fed keeps talking about 2%. I just don't see how we get there.
Yeah, I know, and that's the whole, how, even if they don't do another hike here, it's basically, well, how long are they going to maintain this restrictive policy, and then to what extent is that going to have an effect on the economy? We know that there's some trends there in discretionary spend and on the consumer, that some of those pandemic savings are being depleted. They're battling with higher interest rates on the the consumer and corporations. And then you've got the student loan repayment. Those types of things are coming in. And then, yeah, so for the sticky components, Tom, I think that, shelter is definitely one of those. Wages is, although we got benign data on Friday, a lot of these strikes that are going on, this has been the busiest year for strikes since 2019. There's over, I think, 309,000 workers had basically taken time off or gone on strike. And a lot of that has to do with these higher costs. What happens when you put this much stimulus into the economy? Well, you get the inflation like we've gotten, and then the workers, because of the tight labor market, they're demanding higher wages here. So is that component of the equation, that being wages, going to lead to somewhat of some that spiral relationship in terms of wages and prices? We don't know, but it feels like that might leave some of those core metrics a lot higher for the Fed and keep them around longer in this restrictive policy.
Yeah, I just don't see how, those three things. I know they exclude them. It's part of these data points that they've done.
I don't think GME's going to be
years,
hitting
but at the same time,
under $1.
You've got crude oil at
Unless
86
they do a massive
bucks a
forward
barrel.
split.
Food prices continue to rise. Apparel doesn't matter much
Spy's
because
so
a lot of
choppy
those
today.
retailers have been falling their stocks just because nobody's buying anything. So of course they've got to do some discounting. But you mentioned the jobs part of the Fed's mandate. Another decent number as far as jobless claims, 209,000. I mean, this kind of fits into that narrative that, we're not going to see the unemployment rate above 4% anytime soon. That JOLTS report that recently came out showed that, job openings are actually expanding right now. So, how does the Fed navigate this if the consumer continues to spend and all these inflationary aspects of the economy continue to rise?
Yeah, it's tough. And I feel like, the pandemic basically changed the pool of employment and a lot of the way that we kind of measure these. We've seen the JOLTS, hanging out around this 9 million number. I think, was more closer to 7 prior to the pandemic. Well, what's going on there? A lot of people, came out of retirement and everything like that. And in regards to the Fed, though, I think that they do want to see full employment. They're okay if employment can hang in there, but the main component of that is, well, is that going to affect wages? And that is the inflationary component that comes in. That's the primary thing. So do they want to see, they project that the employment rate is going to get up into the 4s, I believe, by next year. But the question around that is going to be the wages, because they want to avoid that relationship with wages and prices and not being able to basically contain that. Yeah, Tom, do they need to see the unemployment rate get to a certain level before they can take their, basically begin to take the restrictions off the economy? I don't know, but I know that they're going to be eyeing that wage data, so that's going to be really important. And, for the reasons I discussed earlier, it sounds like a lot of the tight labor market plus the higher cost of living is leading to a lot of these negotiations. If you look at United, for example, they just renegotiated another 4-year contract with their pilots. We've had a pilot shortage there. They increased just on the wage side 34 to 40% for the next 4 years. We're not even talking about benefits. So a lot of these costs, when they get passed on to the corporations like that, how do they respond? Typically, they raise prices. That's what the Fed doesn't want to see.
Yeah, it's good. It's a spiral, and maybe we bottomed out as far as inflation data, ticking to the downside since those highs that we saw in June of 2022. But Nathan, I was looking, just kind of for some direction based on maybe sectors in the market. Tech, we've got up higher. You see some of the big names in there. Meta's hitting another 52-week high. Apple's up. Tesla's higher. It seems like if you look at some of the names that are up, you throw Adobe and AVGO in there. Amazon's up nearly 2%. It seems like investors still want to be in this market, but they're rotating back into these names that maybe this interest rate environment or this inflationary environment is not going to negatively affect those particular names.
Yeah, Tom, it feels like this is one of the last places that you can hide if you want to be bullish and feel that you're in a relatively safe position in the market. And, Tom, I don't know if you've been seeing some of these types of sectors and subsectors that are really getting hit here. Look at, medical devices, for example. They are getting slammed this week. Look at the food stocks, Kellogg's, Smuckers, all those guys. They are getting slammed as well. I think a lot of that has to do with, the weight loss drug and that new class of weight loss drug potentially impacting those sectors. You look at companies like solar selling off big, biotech selling off big. Why? Higher rates. They need that upfront cost to help fund some of those operations. So those higher costs, their investors are saying, okay, get me away from those. REITs, get me away from those, higher for longer. And so it seems like it's pushing the pool of investors to, let's go to the tech sector, because we still know that they have, for the most part, especially if we're talking about the Mag 7 there, the healthy balance sheets. They've got the steady cash flow. They've got those annual recurring revenues. They've got the growth trajectory in terms of the fundamental side and the digitization of the economy. So, Tom, it just feels like they're just going to that last sector and saying, all else being equal, given these other factors and the impact that rates are having on it, let's go over to technology. And let's hope that the Mag 7 delivers this quarter, because if we do lose the confidence there within technology due to economic concerns, that would be problematic for the markets.
Yeah, watch out below if that happens in this environment. Yeah. And you mentioned consumer staples just off of 3-year lows as a group. So that sector has just been pummeled. And I was reading through a bunch of analyst notes this morning, and price target cuts across the board. I'm not sure if that's consumer related or if it's cost related. where they can't pass any more of those price hikes that they were doing over the last 2 or 3 years onto the consumer at this point. So those are going to be some key sectors. And the Russell was making some inroads earlier this week, pulling back pretty significantly today, maybe on those higher rates. But last thing, Nathan, here real quick. You know, it seems like you mentioned some of the strikes that are going on, highest level since 2019. Seems like Ford, their most lucrative, biggest factory here, you know, they're going on strike now as of last night about 5:30 Central. What's your take here? I don't see anything getting resolved anytime soon.
Yeah, it's tough to say how long it's going to take, but if they continue to turn up the heat like they're doing and going after one of their highly profitable plants like that, this is the process of negotiation, and they have a tight labor market here. Another thing that I was reading that some concerns about from the union in regards to Ford is that, the transition over to EV is seen as basically a loss of power, as some of those EV battery plants don't have the UAW involved there. But again, with these types of strikes and with these demands, they have the bargaining chip here, Tom, that there's not an easy replacement here. And so what it's likely going to result into is, where do they find, that compromise in terms of wages? And it's going to be higher. Benefits going to be higher. So that's not good for Ford or the automakers in that regard. And Tom, these strikes are going on in healthcare. They're going on in Hollywood. They're going on, we've seen it with UPS and FedEx. So this, we've seen the rising minimum wage, $20 minimum wage for fast food over in California. So these demands are just surfacing. And then, Tom, when you get these negotiations where the workers, these unions, are able to solidify those higher prices, it has somewhat of a ripple effect. Like, oh, if these guys
still
get
choppy,
this
not
amount
quite
and
mid
these
high day yet.
benefits, well, why not us? And then you get more strikes that can follow from that. So it's a little bit problematic, not just for the automakers.
Yeah, it's like that rock falling down a hill. It just picks up steam. More people, maybe a snowball going downhill, picking up steam, and adding more sectors and groups into that space. All right, Nate, let's take a quick break here. When we come back, we're going to take a look at JP Morgan Chase. The banking giant has risen about 10%.
Yay. Taking 3 hours for it to do this tiny cup. Excuse me. AMC's up 2%. GME still hanging out the lows. Down almost 5. If we get a handle and some sort of pattern to jump in on. But so far today has been a nice one not to trade. Had losses from earlier, but I'm just waiting. There's a little pop, new high on the day. There it goes. A little bit of volume. GME new lows there. Down to 15 bucks. Long-term outlook? Like how long? Five to 10 years? Like fundamentally or technical analysis? Dish is catching a bid up 3 1/4. Both? 5 to 10 years? I guess that's kind of hard to do with TA, but good try on TA. Fundamentally, I think 5 to 10 years. I don't think it's going to be bankrupt in within 5 years. So if it's not bankrupt, that's bullish. Price target wise and market cap, I don't know where it's going to be. Wise, if we're looking at like monthly candles, it looks like it needs to keep coming down. I'm still thinking that $10. Or actually, wait, no, on it's not $10. That's right, it's 15. Weeble chart's broken. These highs are 15 bucks. So we're basically at support from the highs in 2014 and 2007. Fundamentally though, yeah, I mean, we've got a good amount of cash. They're almost profitable, and Ryan Cohen seems pretty smart. Seems like he runs a tight ship, and that'll help it stave off bankruptcy during a recession. So they would do better with some more revenue sources, though, given brick and mortar for selling used video games, I think, is a dying business. So whether it's e-commerce, if they're able to take some market share from Amazon or Best Buy or something, or if it's something in the NFT space, it's definitely a huge opportunity for that. It's just how long is it going to take to really become a profitable avenue of their business? Because selling used digital assets would be an awesome fit for GameStop. That's always sold used physical assets. grab some puts there.
That.
Sure. So we've got them pretty steady at about 60%. So that's been the number that we've seen them at for a while. We don't have any big changes. So, I think that what we've seen with consumer happiness being so steady is that their offering is their offering, right? I mean, they don't screw up. The gyms are always clean, well taken care of, good staff. And they don't have any huge advances that would make people off the charts happy. So maybe that could be an opportunity for them to offer, more classes, better equipment, whatever it might be to get that number up. But we're seeing it pretty steady. And so otherwise I wouldn't mention it's not something that would drive me to be bullish or bearish on the stock. It's just flat at 60%.
Flat at 60%. Well, 95% are franchised, over 2,000 outlets there. So they got a little bit of scale there, but I think that franchisees, they want to keep their place clean, and that's probably one of the sticking points for a lot of people that go there. All right. Great stuff as always, Landon. Appreciate it.
Thank you.
All right. That's Landon Swan, co-founder at Likefolio, breaking down the data on Planet Fitness. So, Nate, the last example trade we looked at in JP Morgan was a short iron condor, playing for some consolidation, taking advantage of some higher implied volatility. I kind of flipped the script here and looked at the exact opposite, and we can break down this example trade that I came up with. They've got earnings on the 7th of November, so that might be a catalyst for the shares. It's been a pretty volatile trade. You mentioned the CEO, or Landon mentioned the CEO just left. He was a driving force behind this brand, which you saw a massive $10 sell-off in the shares from the current share price. It was trading over $70 or $60 a share when they announced that. Went down to the current levels around $50. So I looked at buying an iron condor in here, Nathan, out in the November cycle. So you'll capture that earnings event. Where I'm going to buy the 55 strike call, sell the 60 strike call, so you're buying a $5 wide call vertical. And then on the put side, out of the money, I'm buying the 47.5 strike put, and then selling or buying the 47.5 strike put, selling the 42.5 strike put, so buying that $5 wide put vertical. Now, I'm paying a $1.75 debit on this, Nathan, and you can see here from the risk profile that we've got up, If I'm paying $1.75, anything above the 60 level or below 42.5 is max profitability, which would be approximately $325 per spread. So, Nathan, when you look at this, you've got risk, $175, but the risk-reward setup's really good, but you've got 36 days for a big move, right?
Absolutely. And, it's in the context of what's going on with the stock here. As Landon mentioned, that CEO departure, mid-September here, that stock took a drop from roughly 60 down to 50 on the news. And if you look at the analyst commentary, I think they were kind of caught off guard, and they said basically that this didn't look like this was planned at all. And if you look at some of the price target cuts, Jefferies went from 90 to 56 following that news. TD Cowen went from 72 to 55. And so this is a big question mark. We don't quite know what's going on. Is there anything that triggered this type of a move from the CEO? So they could announce a replacement between
AMC rallying
now
at 4%.
and the November
New highs.
17th expiration. There could be some more news, that some context around what happened with this departure. And then, as you mentioned, Tom, you also had that earnings event in early November that could be another catalyst. So in this example trade, when you put on a strategy like this, you're saying breakout. I don't know which way it's going. I'm not really taking a bias towards the bulls or the bears here, but I do expect to move. And ideally, you want to get me above that 56.75 or get me below the 40. Let's see, 45. What was the other break even on there? 45.75. Thank you. Sorry about that. So basically, just get me above that 56.75 or get me below that 45.75 at expiration. $5 width, so you could get essentially a 3-to-1 ratio in terms of the debit to the width, that being a $5 width at a $1.75 debit. But there's potentially, Tom, a lot of catalysts here. And when you position yourself in this example trade, you're expecting some news or an earnings event between now and expiration.
Yeah, and at the beginning of the year, Nathan, this stock was trading $85. So it does have that ability to move, Nathan. And one of the things I looked at, coming up with this example trade is they've only got 85 million shares outstanding as far as their float goes. Their beta is about 1.3. So about 30% greater moves on a day-to-day basis as opposed to the S&P 500, which has a beta of 1. So a little bit more movement there, and we've seen those moves over the last several months in these shares. So expecting some volatility on this type of strategy, and you have that earnings event that might be a catalyst on this one, but pretty good risk-reward setup on an example trade like that.
Don't be surprised by
Nathan,
$10 though, or even single
joining
digits.
Me today. That's Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, joining me and co-hosting. But coming up after the break, we're going to take a look at ExxonMobil. The oil giant announced a buyout of Pioneer Natural Resources yesterday and was upgraded this morning out of Truist. Fast Markets coming right back.
GME is basically a very, very large support, fire resistance from 2007, 2008, and then 2014. So it could hold support here. RSI divergence is still there. Gotta remember on my Webull chart it's broken. I keep forgetting that it's not actually $10. Groupon, big bounce there at 10%. Fingers up 8. Still in the accumulation or distribution. One or the other. TUP. Consolidating to the right side of this channel. See if we get a bounce on it. AMC at the high, 4.4%. Fish up 2.5%. Liechtenstein.
Last year, October, November, we had a couple key levels up there, and after a brief visit above that area, unable to sustain, and you can see some of the high conviction trade that we've seen since. Now, well-defined upper and lower extremes, so as long as we don't take out 81 right now, not necessarily what the Fed wants to see, right? Upper level crude prices kind of feed into those inflationary pressures, but as long as we're below 95, still relatively contained, and considering what's going on, the conflict in the Middle East, I think that in many ways is going to support what we were just talking about in terms of stocks rallying and some of the strength we've seen there.
Yeah, definitely have to keep an eye on crude oil. All right, thanks to Ben Liechtenstein, host of the Future Show here on the network, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're taking a look at ExxonMobil, the deal announced yesterday with Pioneer Natural Resources, nearly $60 billion. All stock deal, George. I thought that was pretty interesting as far as this deal goes.
Yeah, that's the thing. If you look at the deal, $60 billion, all stock. I mean, Exxon has about $30 billion in cash on the books, and you have to consider right now in this market environment, debt's really expensive. So they decided to go with the all-stack deal, which effectively, considering $450 billion in market cap, it's about a 13 to 14% dilution. But if you actually break it down, what's interesting is that the $6 billion in profits, net profits that Pioneer generated last year, is about 12% of Exxon's $52 billion. So you're gaining about 12% more profits for about 14% dilution. So effectively, it's really just a neutral to slightly lower dilution effect for Exxon. But I think the deal makes a lot of sense, considering Pioneer really has a stronghold in the shale region, the Permian shale region of our country. About 10% of total production comes from Pioneer itself, and you have to consider Exxon. I mean, this is a real economy stock generating an immense amount of cash flow, globally diversified, but also vertically integrated from upstream exploration or production all the way down to the pump from the standpoint of refining and sales at the consumer level. So very, very pronounced company. I think at the end of the day also, the deal probably will get FTC approval or DOJ approval just because of the market share. The market share in terms of the Permian Basin wouldn't exceed requirements from the standpoint of anti-competitive effects. But this will bring synergies to both companies because it'll improve scalability. But again, you're taking on about 12% more profits for about 14% additional shares. So that does apply some weakness to the shares. But overall, I think it'll be bullish for the stock. If you look at Truist, they actually upgraded the stock, increased their price target to $131 today. And I think this is on the back of the better synergies associated with the deal.
Yeah, and the stock just came off all-time highs above $120 a share over the last couple of weeks. Yeah. But Georgia, you look at this, and whenever I talk about any of these energy companies, you always have to look at something else, right? And typically that's the commodity. So I had a comparison chart between crude oil and Exxon. It's pretty highly correlated. Sometimes it diverges, but that's something you got to keep an eye on, right?
Definitely. Ideally speaking, you're right. I mean, there's going to be a positive correlation to the underlying oil prices, but at the same time, you have to think about petrochemicals. That's another one of Exxon's big businesses. Refineries, another business. Those two divisions actually fare better when oil prices are down. So that's where the balance really is for Exxon. It's such a diversified company, vertically integrated in chemicals and refining, that those divisions benefit when oil prices are stable versus higher. But overall, yes, there's going to be a a positive correlation because of oil prices, which, looking at oil having come down off the highs of the year, is still relatively firm considering, again, OPEC is restricting supply, and of course, Middle East issues, especially if Iran gets more involved in what's going on in of course, the Gaza Strip and the West Bank. That's going to create, I think, a supportive system for oil prices, which again is going to help Exxon.
Hey, George, real quick, the company basically said it's going to be accretive right away, and it's basically, that shale where they're going to, be the major player there, and it seemed like the stock deal was basically based on the fact that the CEO of Pioneer wanted to retire, and he is at the end of the year, right?
That's right. And again, I think if you just consider this deal, and this is why, 14% dilution looks bad initially, but they're buying a very profitable
taking
company.
some profits there.
And that's where you actually see the benefits from an all-stock transaction deal. And I think at the end of the day, it'll get approval from the DOJ, and it becomes basically the largest player in the Permian, which, again, Pioneer already was the largest in and of itself.
All right, great stuff. Great breakdown here for us, George.
Stop on the rest.
George Tilla, Senior Markets Correspondent. Now let's get into an example trade here in Exxon. If the dividend gets paid out, pretty consistent, but they have a yield of 3.4% on this. So I looked at something that's a longer-term type strategy where you can offset some of your costs on buying those shares while creating some potential yield. So I looked at a covered call strategy in ExxonMobil. Stock's currently trading about $107.30. So they've got earnings on the 24th of this month. So that's going to be a potential catalyst, either up or down, or maybe it just consolidates. But if you think this stock might go higher or just consolidate, this is a neutral to bullish type strategy where for every 100 shares of stock I buy, you sell an upside call or an out-of-money call against it. I went out to the November 17th, the monthly series that expires in 36 days, and sold the 115 strike call. It's about $8 above the current share price in there, and you're paying roughly a debit of $106.60. So in essence, you're buying the shares for a cheaper level because you sold that upside 115 call against your long stock on a one-to-one base, 100 shares for every call that you sell. That's going to be your break even. So you've got a nice cushion to the downside before you start getting a hurt on this. And then if that dividend does keep getting paid on a quarterly basis and you own the shares, you get that 3.4% dividend yield. And then also this creates yield because you're selling that upside call. As you get closer to expiration over the next 36 days, you have that ability to adjust or roll that short call if the market's open, liquidity is provided, where you can create credits. So as we get closer to November expiration, buy that 115 call back. Market's open, liquidity is provided. You sell another 115 call or another 120 call based on where the stock is. So the
it looks like it's setting up the Head and Shoulders.
You want to be in a shareholder
that
of
channel
this.
too.
If you want to hold it for long periods of time, you can sell upside calls against it or let them go out worthless and then just keep the shares. But holding the shares allows you to collect that dividend if it gets paid out. But this is a strategy, longer term, creates yield on not only the dividend, but also the calls or the call that you sell against your long stock position. Now, the stock goes up. You do have that issue where you might get your shares taken away, but you can always, if the market's open, you can close that short call ahead of time so you don't get assigned on it if you want to keep those shares. All right, that's going to do it for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing is coming up.
Ooh. Maybe a little flushy there. I'll take a little more profit. Got to transfer out of Fidelity. It's just the silliest platform to trade on. Really silly. Didn't even. What? There it is. Adding to some puts. Adding around VWAP. Okay, got a pretty good position on puts. You're at VWAP. There it goes. Breaking through VWAP. Taking a little profit there. Whew. Gonna stop on the rest. GME new low. High coming down some more. Flashy. Flashy. Wow. Closed one more there. I think Fidelity did it. Hey, they did it. You guys gotta have 2 pair, right? Does everyone just play super loose? Me 3. They had a 2 pair before. My 2 pair wins with the 9s. 9 jack. Oh, beautiful. Beautiful. What this guy have? Nothing? Oh, I was supposed to trade on my small account. Shoot. Would have been a nice ripper for the small account. Okay, let's see. Look at the next target. This low of the day, actually? Oh, snap. Yeah, that's low of the day. We take a little more off there. Okay, I took some off there. So the inverse cup. Okay. Really, this is the inverse cup though, down to here. I have a little one here. Should just sit on my hands for the rest of these.
But certainly mixed at best and a premium seller's dream. Stock right now down 60 cents. That is an unchanged move if I've ever seen one.
Yeah, this is, you're right. I see this move to the downside. I was looking at this name when we first opened and it was higher, but to see it barely unmoved on the day, I'd say that's a win for the bulls, considering, again, the last earnings report when things were pretty brutal. But our last name today is Yum Brands, which ties nicely into our Domino's theme of all things food and obviously eating away
Nice.
from home.
New low there,
Today,
still
though,
flushing.
October 12th, Taco Bell is testing crispy chicken nuggets in select stores. Not to get too excited here, though, in the Chicagoland area. It's only starting, at least, in Minneapolis, and 83 Taco Bells, which I was like, the city of Minneapolis has 83 Taco Bells, but I'm assuming that means the surrounding areas as well. But what's interesting about this is they did say this is truly a very premium nugget. It's not a chicken nugget like you might get at some other fast food restaurants. This is very much elevated. Actually, a chef with Taco Bell's food innovation team openly just threw shade at McDonald's, saying that Taco Bell has been developing these chicken items due to this really high consumer demand with its nuggets featuring all white meat, which is something when you go to McDonald's, he said, that's not what you see. And I mean, if this isn't the pot calling the kettle black, if I've ever heard it, Taco Bell coming at McDonald's for the quality of their food. I mean, come on, you know when you're eating at either of these places, you're not getting like an organic, healthy meal. That's just not their style.
It might be the first step towards a reinventing of a brand. You know, I like both of these places, but neither of them are at the top of my list when it comes to where I want to eat for dinner. They get the job done from time to time. But when you think about it though, Jenny, in this particular case, yeah, do you really want to start this battle? I'm not so sure. We'll see how it rolls out. We'll see how successful it is. But it kind of reminds me, and it makes me think about the F-150 Lightning. And like, yeah, it's a very popular car, but just because you made it electric doesn't mean those same consumers want to buy it. Or the Beyond Burger, or at McDonald's, the person who wants Beyond maybe doesn't go to McDonald's. So
Okay, and
you
take some more
start looking
profits
at
there.
this where it's like, does the elevated palate go to Taco Bell? I'm not sold on that.
And you know what, me either. I will say that I think they've done a great job rebranding
Just a
some of
wee
their
bit.
stores. Now they have those Cantina locations that are actually very nice. I mean, all things, but relative, right? Relative to Taco Bell. Taco Bell, when I was growing up in high school, they had like rats in the store. I mean, now it's improved from there, but I'm not saying that
Taco
it's
Bell
a
should go
five-star
to.
culinary experience.
Roast,
But
Jenny.
interesting story. So we'll be diving more into
Jenny.
our more food-focused names here. We'll be looking at Domino's Pizza as well as Yum Brands. Perhaps we'll be lessening our conversation on the chicken and quality of Taco Bell. We'll be looking at the technicals as well as some example trades in both of those names. Stick around. Next Gen Investing. We'll be
Beautiful
right back.
bears build liquidity all day. It's hard to see though. Really, I mean, big range. Breaking that channel was it though. That was it. I grabbed a couple up here, real starter, and then I went heavy once we broke that channel, which was a little sketchy just because we're right at VWAP. And it was again a breakout trade, which I doing, but I guess not a breakout to the way it's been going. It's a reversal breakout, which are safer potentially. I don't know. Felt safer. Not a lot of time left, and we could see a lot of drop. We could see bounce. I should stop selling them though. I've sold almost half. No, maybe about half actually. If we get a chance to reload, I'll do it. Do it. Double top there on the hourly. How's that cup? Cups could be double tops. For a gap fill down here, 432. RAD's up 3%. What? Look at that reversal. That is neat. Still flushing, dude. There's no bounces here. Well past low of the day. Ooh. Jeez. Safe to say I made back my losses today. What's GNS doing? Down 3.5. Come on, I was there. Give me better cards and I'll play.
Of this gap that we formed here, this 350 level right there. So that would be an area to watch as we progress through this day. You know, the gap has been filled, but it's still noteworthy. It's still an important price level.
Yeah, and as we saw with the overall market starting to crumble here, starting really at noon, Domino's is also losing a little bit of its strength. We were just saying, it was unchanged. It was a boring day. Now we're seeing selling, of course. We spoke too soon, but as far as RSI and momentum, is it matching now the overall price?
Isn't it funny how that goes? You know, once you put it into the universe, it kind of reverses on you there. But looking here, we can see we've got our downward sloping trend line. We've also got a downward sloping trend line on the RSI here. Now, it was really looking interesting to me earlier today because we were breaking through the RSI's trend line. So momentum was breaking off of its downward sloping trend here. But that's not happening anymore. We are retreating in terms of price here. Momentum is waning. Once again, we're still back within these two boundaries. That would be something to be on the lookout for, would be a mismatch between momentum and price. If momentum is starting to break out before price, it could be a clue that things are starting to happen, some steam perhaps building up in the name here. So be on the lookout for something like that, because we would be pretty close to a breakout regardless, even with the declines that we've seen recently here. So momentum still trending down, price still trending down. Overall, things are still geared toward the downside, even though we've had a significant recovery during the past few days here.
So overall, things still trending down. Not the sentiment I wanted to hear, Rick, but tell us what you're watching now as far as support and resistance.
Well, the horizontal levels on this chart I thought looked important here. And once we add volume profile into the mix, we can see that our 332 level is even more important than we initially thought here. This green dashed line matches up with our volume profile point of control, our area of heaviest trading. This is where the most trading activity took place, near this 332 level. So a lot of conviction around that point there. So if we were to keep moving to the downside, if we broke through 350, that could be an area to watch. We've also got another volume node that we were within today, right around perhaps the 355 level or so. We are pushing our way down from that point, though. We weren't able to recapture our moving average today, so that's one more point to watch here. Another node, 390. This one stuck out to me as well. You can easily see the peaks in this study here, and those are the important price levels to watch. So if you're worried about, moving more to the upside, that would be a point to watch. We'd have to get through 377, though. That's where about price bottomed out numerous times there. So that now becomes a resistance level to watch.
Right, okay, so old support does become some new resistance there. Really great breakdown on all things Domino's Pizza. I wish it was on a more positive day. It was higher earlier in today's session, but what can you do? So, Alex, with this in mind, walk us through a bullish example trade. I mean, this name still has a relatively strong conviction of those analysts that are covering Domino's.
Yeah, I looked at a strategy that could be moved around quite a bit. So if you have a different feeling in Domino's, you absolutely could customize this. But if you went out to the November monthlies, the first thing that stuck out to me was there was only $10 wide strikes available. So I looked at something that would still allow us to control the risk, bring down that total risk, but allow for a trade utilizing those options, creating a bullish trade in this case for this illustration. Looking at just buying a call butterfly. So oftentimes we'll talk about giving these a skewed nature or a bit of attitude and maybe doing them for a credit. This is just your traditional equidistant call butterfly in which we're buying one of the 380s, selling two of the 390s, buying one of the 400s. You'll see there's two break-even points because there's risk in both directions. First break-even point at that expiration date would be 381, and then of course 399 being the upside break-even. There's only $100 in risk in this case because it's a $1 debit, and it can expand to as much as $900. The first thing that should flash whenever you see risk 1/9 of the max reward is this is probably not the highest of probability trades, and it makes sense because, well, right now Domino's is trading at 351 and the first break even is $30 higher. So it's speculative, but the risk is controlled and it's much smaller than the potential reward. So that risk and reward is always going to be related to probability. It's not perfect, but it's a function of those probabilities. So you need a move, you need a big move, but if you get it, this thing could really expand.
Yeah, right. Really well put. And obviously, we already have that earnings catalyst now behind us for quite some time. Our next name, though, is Yum Brands. And Yum Brands is, of course, much larger than Taco Bell, but the story today about them developing this premium chicken product, Rick, just has me rolling my eyes. I would say that McDonald's is still going to be the king of their chicken nuggets, but I respect the attempt here at least, and I do like Taco Bell. So walk us through what you're seeing as far as the charts go.
It's certainly a crowded market. I feel like the chicken sandwiches and nuggets and tenders and everything has become so much more popular recently. But
totally.
Interesting chart though, because we had a big breakdown here. We had formed our highs here for the year around this level near 144, 145 or so. Since then, trending downward in a channel type shape. And the way I created this channel, I just drew the normal trend line going across the highs, duplicated it, and put it across the low point right here. Now, it did give us a bit of an idea where we might find some support there. That's about where we closed a couple times, and we had some struggle there. We really were fighting our way to get back above that level here. We bounced around that level a few times. Ultimately, though, looks like we're failing here. It doesn't look like it was meant to be today because we're having a rather steep drop-off here as the broader market starts to turn downward here. We're stopping at a level that did catch my eye, though, near 116.19. That's these lows from all the way back here during this little downward price movement there. Not the most significant price level I've ever seen, but it caught my eye nonetheless, and that's about where we're at right now today. So it'll be interesting to see if we hold on and if we can maintain at this level here. In terms of the broader trend, you know, our moving averages are trending downward here. We're below all three of them. The slope is steepening, it looks like here. We're seeing a crossover of a faster moving average crossing below a slower moving average. The 63-day is crossing below the 252-day, sometimes known as a death cross. Not the best trading signal on its own, but still an important sign of trend degradation here. So we're picking up steam to the downside, especially if we start breaking below this little support level that I mentioned.
So now as far as momentum goes, walk us through what you're seeing with the RSI.
Well, it's not good news if you're bullish, unfortunately. We've been seeing repeated crossovers into the oversold area here. And another illustration of how the trend is starting to accelerate to the downside, we've got a much more narrow, much more steep channel here. Once again, I did the same thing. Just drew a trend line going across the highs here, duplicated it, put it across the lows. Matches up pretty well. We're kind of near the lower end of that level as well now here. At the same time, RSI weakening, falling further into the oversold area, making new lows with price here today. It was looking like perhaps earlier today, before we started seeing this drop off, that we were maybe seeing a little bit of divergence here. Price was making new lows. RSI was staying steady just below that oversold threshold. That's starting to break down, though. It's not looking too promising right now for the bullish crowd here. So look for continued weakness if this closes in the oversold area and makes new lows on the RSI.
So now as far as some price levels to keep on your radar here, Yum Brands does report in about a month at this point, so you do have some time, but what are you watching?
Well, once again, volume profile helps kind of flesh out what we're looking at here. I also chose to include standard deviation channels here because, like I said, I didn't really see a lot of real clear price levels based on the price action to look for support and resistance here. So some nodes, 110, a little one there, another smaller one right here near the 119 mark. Those are some areas to watch based on trading activity. But, you know, if we do continue going lower here, the -3 channel, standard deviation channel, 3 standard deviations below our blue linear regression line there, that comes in around 114. So 114 and then 110 to the downside would be some areas to watch. If we can get our act together and start moving back upward here, we could see some resistance around this 119 level that I mentioned, especially because not only for the volume node, but because it's the site of our old trend line that we were struggling with earlier this week.
Low there on
So
GME.
that could be a resistance
I just consolidated
area to
the lows.
watch, but really not looking too positive here.
Yeah, I mean, clearly illustrated. It's just been somewhat of a free fall in the
Plenty
last
of time
couple
for this
weeks.
market
So
to
really great
keep
breakdown,
selling,
though,
honestly.
on some
They
fun
might end up being a big
food-focused
day.
names today. Rick Ducat, our chart master. So now
Whoa,
Allison
yeah.
trading this name.
Might be time to get back into some February puts on SPY.
Not pointing to a more
We get an engulfing candle here.
trend as far as the technicals go. So walk us through
We
the name
start
of
to
bearish
scale in.
example trade.
Yeah, first thing that should stick out to a trader who's looking at the options market in Yum was that there's
We'll
only
see.
monthly options. And
Probably
we're
will get
kind
an
of in
engulfing
that
candle, though.
no man's land with the October expiration.
Which could just set us up
expiring
for some
next
chop.
week. So you could elect for an 8-calendar day.
Wouldn't expect us to reversal after this rally.
Or you're forced to deal with earnings within the trade. I elected to do the latter and looked at a longer-term trade. Jenny may want to cover her ears. We're going out to January of 24 on this
New
one.
lows
That's going
there.
to be the long anchor of this put calendar, selling November. So buying January options, the 110 strike at puts, selling the same 110
If we
strike.
can get 433.18, we'll take a little profit there.
$1.50 debit. This is going to benefit potentially from a move lower. You can see that this risk profile looks like a mountain. It peaks out at the strike. In this case, that's at 110. It's a customizable trade. The debit spent is the risk on the trade. So in this case, $150 in risk on a bearish trade. But also the beauty about put calendars is this is also a volatility
nice that this
sensitive
came.
trade. Oftentimes we associate
Like all day of just
increases in implied
little scalp
volatility
trades, but
with moves
ugly.
lower in
Didn't want to do it.
stocks.
So
you have a
glad I
chance to
waited.
potentially get a double whammy that's
started stopping out early
in
on
which
and
volatility
taking some
expands, that
losses, and then it
benefits
was
the
like,
calendar spread,
I just have to
and of
wait this
course,
out.
a move lower,
And
which
then this just
benefits
set
a
up
bearish
perfectly.
put calendar. So
We even
a
got
chance
a
if you do
RSI
get that move
divergence there on the
lower,
5 minute,
expansive implied volatility, this thing could profit
which is
as
right
a
when we
move
started
towards
entering
110,
puts,
potentially takes
and
place.
then
And I'm just going
added
to just simply disregard the January
3 times
2024
at the break,
expiration,
that
because
channel.
that to me, that's in 6 months. That's not in 3 months or whatever it actually is. That's
New
quite
lows
frightening
there,
that we're
wow.
almost now in 2024. But we will leave it there. Now coming up next, it's time for our FOMO segment. So we are talking all things Netflix, although Netflix crumbling on the session amid the overall market weakness. Shares down about 1 3/10% here and right around now their session lows.
selling one at a time. I've been doing better trading tomorrow's options. Just a little easier. I think more so than that, trading on a larger account and just not thinking about buying power. That has helped me the most, I think. That plagued me too often with staying into a trade, which I should have just stopped out of because of buying power. There's a new low there. And position sizing. So when I think of position sizing, I think, oh, smaller here, you do less, but actually it goes both ways for me. If I have enough position sizing, I've been doing better with larger positions. Because I think it's because it's forced me to wait for a better setup. I don't want to just take little scalps here and there with a big position. So actually having a larger position has been better. It's kind of strange. That flushy flush. All right, I'm gonna take some more there. Wow. Taking a couple there. We're at the low from over here now. See if you get a chance to reload. Could reload and even fill this gap still today. Thanks guys for your support. All of you that thumbs up the stream, I appreciate it. 130. Little bounce there. Oh, I meant to call that. I'll take some more off if we get a retest down there.
And fit your own narrative.
Yeah, I don't agree. I don't think inflation's the primary risk at this point. I think that's why the market was quiet before. You didn't see a tremendous reaction in yields. The Fed swaps didn't price in more hikes, for example. It's somewhat firmed up, but for the most part, this is a market now that can see the path to the soft landing. But it's now on the Fed, and it's on all these other factors that can be unforeseen at times, things like geopolitical tensions, to cooperate so that it can actually be done. The tailing of the 30-year auction, the biggest tail that we have seen since November of 2021, now that's interesting to me. That sent this market lower. I'm someone who uses the information to help explain what is actually happening. What's actually happening now is far more interesting than what was happening 35 minutes ago before we got that auction. So to me, today is much more of a story
Oh, the
about
bond auction's
the
what triggered
longer
it.
end of the yields, less so about what the Fed's going to do. But CPI is
Close
just like
another
it
one
is
there.
every month when there's inflation or when there's not.
That's
it
what
paints
started
part of
this,
the picture,
isn't it?
so you got to pay attention to it.
I really feel like you were the
Yeah,
catalyst
1
that
o'clock.
set the stage for this movement, because you were like, I
Wow.
miss the days when these economic figures would come out and markets would move, and then it was like nothing was moving.
You got to complain sometimes, and
Look at
sometimes
that.
you get rewarded for that. It's like when you're watching a sports game or something, you're
Give me down
complaining,
six.
and then what you're exactly complaining for finally turns around and happens.
I'm superstitious. I don't even watch games if I'm like down by a lot, because I'm convinced if I don't watch, they'll come back because of that same
There's
reason.
something to that.
Yeah, okay, so now to shift gears here and
Closing a
focus
couple
on our
more.
FOMO discussion today, which is Netflix, which is a name that's seen now some weakness on the session with the overall market, frankly. So we're down pretty much nearing session lows. Now there's several pieces of news that are facing Netflix. As always, this is one of those names that just garners a ton of attention. I think first and foremost, the fact that they have their third quarter earnings, which are expected next Wednesday. After the closing bell. That is a very busy day for earnings to keep on your radar. But Citi today did reiterate Netflix shares as a buy into that earnings event next week, saying that good news is first. They believe that Netflix continues to take share of video viewing, and the ad tier still has significant upside potential. Second is their neutral news, with
You're low there on
expect
SPY.
that Netflix
Wow.
to report these results
Wow,
in
wow,
line
wee,
with
wow.
the street on pretty much all of their key metrics. And third is the bad news. Consensus estimates for their fourth quarter of fiscal 2023 and 2024 may need to come down for revenues and margins from here. Now, we also know that negotiations that are happening between Hollywood studios and streamers and striking actors have stalled Wednesday, according to a report we got from the Wall Street Journal. The alliance that represents several of these entertainment companies, which includes Netflix, Disney, Warner Brothers, Comcast's NBC Universal, Amazon, as well as others, did submit this deal that said would create an untenable economic burden, according to the Journal. So right now, if the agreement is not reached at the end of October, it will likely greatly diminish the studio's chances of salvaging their 2023 and 2024 television season, and is expected to absolutely wreak havoc on a lot of these movies that are slated for now 2024 and beyond. So this is seen as obviously a step back. We'd been making significant progress. The writers were able to reach a deal, and the strike that had been lasting months, it doesn't seem like it's going to be as easy for a lot of these actors. So obviously the Screen Actors Guild is one that has been greatly affected by this. So that's obviously weighing on Netflix shares. Alex, I mean, that has been an ongoing story. Actually, I would say it's not necessarily the catalyst of the selling today. It's just something to consider when looking at their slate now down the road. Earnings will be interesting. Subscriber growth is always one that's in huge focus, but the street still, all the analyst notes I've seen this week say we could expect a more optimistic take given the fact that Netflix has been able to be the dominant streamer now for every quarter, even in spite of this strike.
It's going to be an interesting quarter. Every quarter for Netflix is interesting. Few names this size have the potential to move as big as Netflix has around earnings. We had a 40% decline last year after having like a 25% decline the quarter before. It has had massive up quarters around earnings. It has had catastrophic like declines at times around earnings, and it's still making back or attempting to make back stock appreciation from those 2 quarters alone. This stock before the first disappointing one was $500. It traded all the way down to 162 after 2 quarters of declines. That is unprecedented in some cases for a company that is this big. So it's certainly something to monitor as we go, knowing that earnings can be a massive potential movement for this stock price. And of course, it's next week. So we're sort of in that limbo period where you can't really avoid it at this point if you're looking at an example trade. So one thing you'll notice is around earnings, particularly ones that have a history of moving a lot, is implied volatility really starts to swell around these reports. And we're seeing that happen. The IV percentile is up into the 30s now. And if you look at implied volatility as a whole in this name, it's about 50% right now, compared to the actual historical volatility over the last month, which is down in the 20s. So that's a huge discrepancy, but not uncommon around an earnings event, knowing that this can be a massive catalyst. Looking to do maybe the unthinkable in a name like Netflix that has such a history of moving so much. We're looking at a range-bound like strategy here for this trade illustration, Jenny, kind of thinking outside the box a little bit, fading kind of history in a way in Netflix, looking at all these factors that you described and saying, maybe in the end it kind of becomes a positive message, but there's still concerns and maybe less of a movement. If you're along those lines of thinking, maybe something like selling an iron condor in next week's expiration could seek to accomplish those goals. Because volatility is so great, we're able to actually have a pretty wide net cast around this. The one in particular that I was looking at was selling next week's iron condor, in which we sold the 325 put and sold the 400 call and then bought $5 wide wings. This would create a $75 window in which max profitability was attainable, with break-evens just outside that at $323.50 and $401.50 if you collect $1.50 for your credit. And so risking $350 here, Jenny, to potentially make $150, and you'll see the risk profile here illustrates what this looks like. That middle piece where you can see it kind of plateau out where that max profit potential of 150 is $75, okay? Well, this is a stock that's trading at 360. That is almost 25% of this stock price. Not very many names on the street can you do that, especially ones that are as active as this name.
That's so true. That's such a good point when looking at that. That illustrates that so well. And I don't know about you, but I still have like PTSD from some of their moves. I believe it was like the first quarter of last year when we saw that steep day of selling. I will never forget. I mean, it's rare to see a name as big as Netflix move that significantly to the downside.
The market has that same feeling. That's why these positions are possible. That's why these trades are possible. There's 76% implied volatility in the next week. That's basically saying that if you annualize that out, that how much movement is expected could lead to a 75%. I mean, that doesn't mean that you're going to get 75% next week.
Right.
But right now, $33 is essentially what the expected move is between now and next Friday, up or down. That's pretty big.
It is pretty big, and I will say, I guess it's important to be risk defined because we remember that day too well because it was brutal and it was well outside the market maker move, at least it was as far as the options market have been pricing in. But we will leave it there for FOMO. Coming up next, it's time to talk all things cryptocurrencies. We have Ben Lichtenstein here with us to break down what he's seeing in Bitcoin as well as some of these individual equities with crypto exposure.
rolling, closing, or rolling all my put. Got 2 SPY. Nice, well done. 20 to 140. Wow. Are those dailies? Why is that muted?
Consolidation. Just wanted to show you real quick where we are relative to the 50, the 200-day moving average as well, and that kind of speaks to the point.
I
Again,
mean, this
Alex,
morning
there
was...
hasn't been a lot of conviction here. We've been
Those went
sideways,
way
rotational,
under on
but
you. All this
is
data
all
burning and
a,
like
you know,
melting
kind of
up.
a longer-term trend to the downside. So
I
essentially,
tried dailies today. Bad idea.
And I've had a hard time rejecting this lower level.
Today is giving you a very false sense of
Yeah,
reality on how
maybe
those
any
work.
sort of trend that could excite you. I mean, we're just sort of stuck range bound. It sort of follows our theme where it's like, it feels like right now the market is lacking any sort of catalyst, just clinging on to anything. The crypto market.
Did you look up here what they were down?
Today, but has seen
Probably down like
a
70%.
Really phenomenal year, all things considered. But again, the volatility
Down to 10, down 50%.
So substantially, it's like we're up.
Maybe even more. Did you check up here?
From depleted levels.
Well,
I can't believe it was a bond auction that caused this. Must have been ugly.
Right? So that makes a lot of
I've got one
sense.
left.
Taking a look at
One for the
another chart
homies.
that I have prepared for us here today, Jenny.
And I'll add potentially if we get a nice bounce.
Rallied up to, well, you've got the highs up.
But I'll just let this last one keep me from fumbling back in.
2021, which coincides with the big move up that we saw in coin, and then you get that big move lower, sideways consolidation, and look at this. As I take a look here, you can see, I'm pretty sure it is this one that we wanted to look at. It is 26,000 is where we've been range bound and just sort of sideways. Also, I want to show you a similar situation. As we take a look, you can see how we're hovering, teetering around the 50-day moving average. Look, there hasn't been a lot going on in Bitcoin either after coming off that 32,000 high, lower extreme around 24, and here we are kind of hanging out in the middle, kind of working our way towards that lower edge of.
Well, Ben, appreciate this breakdown on all things the crypto space. I think this is one that when we
these ones for tomorrow I got. We're at 124%.
Here, but a really great breakdown on what we're watching.
But I didn't get them this morning.
Overall trends.
I got
we will leave it there. Ben Lichtenstein, the host of Futures. Now
got some here, and most of them I got here. So somewhere right above there would be my average.
The overall market. We'll discuss the analyst activity.
These were dailies, probably like 200, 250 maybe. Maybe more. I don't know. I forgot to trade on my small account though. Just takes too much time trying to position on multiple brokerages. Maybe for the final trade. If there is a final trade, I don't know. Wow, well done. Well done, Guts. Awesome, man. $14.76 is what? GME's low? Still coming. I mean, you could have even grabbed some right there. That's just a little bit of. I'm chilling. I'm chilling on that. Risk reward down at these levels is not as great. But you can see this little bear is building liquidity. Break of that channel. I'd like to see a bigger one though. Bigger pullback. Just be chopping around down here too. So 1 DT on all stocks today. Tomorrow is 0 D minus for the whole market. That's true. Yeah, all stocks. All stocks have weekly options. One day. Yeah, I'm fine just trading SPY for now. Dailies or tomorrows or whatever. Oh, this guy just got connected, I bet. Oh, he gave it a check. Nice. Really threw me off that huge re-raise.
So I think this is an interesting case of, you know, there's traction and gaining in popularity for this particular eyewear company and their brands. They're also increasing their marketing spend estimates for the next year, which also includes other ancillary services like accessories, insurance services for their hardware. But their eye care and eye exam business is actually growing as well. And I think, you know, at the end of the day, brands carry a lot of weight. And of course, the brand recognition that this company is gaining seems to be giving attraction because, like I said, you know, outside of a lot of
I don't know what you're saying,
discretionary
Maui
stocks,
Sam.
which are down significantly, this company is actually growing still its sales double digits.
Yeah, George, so really
two
quick,
pair?
any
Look at
final
that.
thoughts here, Roy Parker, before we let you go in about 30 seconds or less?
Yeah, so looking at the trend in the stock, it's actually trading well in the last 3 or 4 weeks. I am looking at around $15. If we see a clean break of that level,
We've got a
maybe retest that on a consecutive
got an
weekly
M
basis,
here.
that might present a trend
That gap's getting
reversal
filled. Maybe
opportunity.
today.
So it's starting to look interesting, but it hasn't broken out of
Double
that
top.
trading range at $15
Broke
yet.
through that
Yeah,
support.
really good point, George. Appreciate the
Look
breakdown
for a pullback
on
to
all
that
things
support,
Warby Parker.
maybe.
I believe for the second time in just 2
To
weeks.
grab
We'll
some
leave
more
it there.
puts.
George Tillis, senior markets correspondent
if
here
we're
for the network,
doing
and
it.
that also does it for Alex and myself for Next Gen Investing for this Thursday. Now, coming up next, we have
See,
the
'cause
watch
that,
list. Nicole
that gap is, oh, we're starting to fill it right there even. 432, a line there. There. And then this low, I'll put a line there. Very well could be our little bounce level. Where is that even? Got too many. Next one up. Right there? 43319. Oh, that's not a very big bounce. What are you waiting on, Maui? RAD's now -7. It's jumpy today. Little double top there on top. A double top. hit pot. Why did it do? Trying to bluff. This guy's bluffing now. Probably. Nobody has anything. Oh, he did have a king. Wow. Oh, new low there on SPY. Channel was some bears building liquidity, maybe. I want to see greater pullback. Wait, is that the level? It did reject it. Look. Right on it. Oh my goodness, I totally missed that. Whoops. I'm too late. Probably not, but this feels like a chase. Where's the gap fill? Could have been prepared. I don't. Yeah, oh, the gap's almost filled now. I missed it. It was a little pullback, and that actually did retest. I wasn't paying attention. Oh well. Gotta leave a runner. I wanted more so I can leave a runner. Should have gotten more just so I can leave a runner. Oh, GME back to 500. Might be waiting a while unless they have a couple reverse splits. You're probably never gonna see 500 again. Market cap wise, maybe, but you're gonna have a forward split before then. I mean, potentially, I guess if it is an actual squeeze, but if it goes up in a more natural, fundamental way, which I think that's what we're going to get on GME pretty much from now on, then they're going to have enough time to have forward splits on the way up. So the actual share price will never be that crazy. But I know what you mean. Yeah, they're 146%. Where did I start closing these out? Too soon for sure, but not bad. I think I did all right. We'll review. My first initial close made it smaller. Yesterday it was too big. When you get a big reversal and break like that, it's most likely at least gonna, make it to the next major support. Should be low of the day. This is just a bonus down here. Called that. It'll be effective 15. 10 cents to go. You should get there today, I'd imagine. Ace queen, 3 queen, 10s, baby. 10s.
Nicole, an escalation in the relationship between UAW and, at least in this case, Ford. They're striking at the big SUV maker in Kentucky.
Yeah, this walk-up, I don't think people expected it today because often these expansions happen on Fridays, and today is Thursday. To your point, escalation indeed. Thank you, Kevin Hinks. Now let's take a look at the bigger picture. Alan Becker's with us, CEO, Retirement Solutions Group. Thanks for being here. What do you think about the week that was? The market certainly tried to show some resiliency, but we've had a lot of volatility. You've gotten mixed bag for economic reports, and of course you have what's going on abroad.
Absolutely. I mean, being a Jewish American, my heart goes out to everything that's going on over in the Middle East. I was actually planning a trip this weekend that I canceled. So yeah, I think everybody has to look at what's going on and realize that there's a lot of uncertainty, and long-term markets don't, or short-term markets don't like uncertainty. They don't like uncertainty at all. And we've got a lot going on right now.
Yeah, I mean, I think that's well said, and I've been reporting all week with a heavy heart, no doubt, Alan. So that being said, at this point now, for example, we saw volatility in oil, right? And what's interesting on Monday morning, the market sold off. You saw oil moving higher, and then everything sort of flipped around. Now we're digesting some of the inflation reports showing a little more inflation, and now folks are saying after the Fed minutes yesterday, while there's still some Fed talk and we have to be careful and all that, they're still very concerned about inflation. Does this mean another rate hike?
Well, I think there is going to be another rate hike. We've talked about a 25 basis point increase, but I think it's already priced in. As we look around and you think of micro versus macro, what we're telling our clients, and we have a purpose-driven planning process with what we do here, and we really are telling our clients, stay invested, work their plan, be forward thinking. What I mean by that is, you may not want to add new money to the market, but you don't want to pull money out of the market. That would be counterproductive. A lot of the gains are made during the bounce back. So we want our folks to stay true to what they're doing and understand that why they're investing. If they're investing for the long term, for their retirement or for legacy or whatever that purpose is, to stay true to that. I mean, we see the strikes and the inflation, but it's starting to work in some sense because we can see
cut the runner.
Economic growth, right?
I gotta leave one for the homies. How long do they need it?
Back, but we've got to get the political side fixed.
And more runners.
The housing,
okay, next time, leave 2
we've got
runners.
Speaker, we've got definitely some concerns there. So I just keep
2 for the
back to our
homies.
clients. Part of the reason you have a financial advisor is to have those conversations, talk you off the ledge, have the conversation to stay true
Dude,
to
lows
what
there on
you're
SPY.
doing,
Wow,
and
almost
that's
down
what our
1%.
message is with our clients.
This is a huge reversal.
Right, understood. So at this point, when you're telling your clients, do you think that, I know that you talk retirement, and you have long-term solutions, and then there's near-term solutions. And you are
I should
seeing
have
a
left
lot
more.
of the money managers moving toward.
I was gonna reload if we got a good opportunity. This was the only opportunity, and this wasn't great.
Let's say between now and the end of the year.
Crazy.
So we can see some high yield money markets. There are some different types of funds out there. Obviously, bonds are looking more attractive. We are a fan of some fixed index annuities as an alternative for some income in retirement. So
It's still pretty early. We might have an upside trade even.
Fixed spaces have a lot more value because when we look at it, sometimes when you're trying to invest, if you're trying to make
2 hours.
5% you can get a bond or a CD at that. Is it worth
It closes
taking
down
extra
here.
risk?
That's
So
pretty bearish. I might have
especially on
to
short-term money, if
get back
we've
into
got
those
clients that are
Fed
looking at,
SPY puts.
purchasing homes or
I don't know.
fearful of the inflation, we don't want to tie
The
the money
Santa
up for
rally.
duration. So obviously on the shorter duration,
Might
we're
be
looking
off.
at the shorter-term CDs, shorter-term money markets, things like that.
Yesterday, the Fed in the minutes noting the UAW strike, actually saying that the UAW strike could be a factor, could dampen growth. And so they wrote they were moving carefully. The UAW strike is still going on. In fact, we're seeing it expanding today. We talked just moments ago about Ford's Kentucky truck plant. You have 8,700 people who are walking off. What kind of impact could this have on the economy? Not only to have workers that may or may not have jobs, and also you know, these companies that will have to pay more.
Over 1% down.
Inflation. You'll see the autos themselves being more costly.
Jeez, he went 168% now.
At least.
I kept all of them.
So
That would have
you
been
see I'm wearing the red.
wild.
You know, it's Chiefs Thursday here in Kansas City, but I mentioned that because our Ford plant.
I gotta slow down selling even more.
Because they
These
can't get parts. So even
bigger
though they're not on
reversals.
strike per se, they can't get the parts to produce. So it's
Selling,
affecting.
like,
So I think we're going to see that trickle into
closing
the
out of some on this channel, that makes a lot of sense. Like, I bought some up here, close out some here, which I did. But once you break that channel, it's like, you've got a pretty, you know,
and then I think as you saw through COVID,
not always, but
a few vehicles
typically, when bears building liquidity like this all day,
quite a bit. So yes,
you're most likely
going
gonna
to be affected. I
break
think
it with the
people have to
volume,
price in
especially.
if they're needing a vehicle
You're
in
gonna
the
see at
short
least low of the day, so taking out a lot there, but
I mean, especially during COVID,
leaving some to keep going, and this is
a
crazy.
premium price, no doubt. Tell me more about the advice to investors. You talked about.
I kind of got to cut this run. I feel like this is probably low right here.
Just some final thoughts there.
Yeah,
I'll leave one for the homies. This one is just ballooned up in so much value, it's hard to
legacy, etc. But
not want to
the
cut it.
driver or somebody driving alongside you to be that coach or that you know, trusted person that you can potentially call up and say, hey, I'm concerned about this. And then planning is the key.
Big
you should
reversal,
stick to your planning model to make sure that you hold true to it. Don't let emotion come in and something you see make you pull back from that and really make a long-term impact.
I think I gotta cut this thing.
Consideration.
Yeah, I'm gonna cut it.
Understood. Alan Becker,
Homies served me well.
see you. Thank you so much
That
for
last
being with us today.
You as well.
50%.
Alan Becker, Retirement Solutions Group. Thank you. Coming up next, the conflict that we've been speaking about in the Middle East now.
All right, trailing stop.
On oil, energy, right? It's moving certain stocks over the last
Trailing stop. Look at that flush, more flushy.
The impact, what we need to know, and this comes on the heels of the Russian invasion.
I guess 30
into
cents.
Ukraine. Oil in focus coming up.
Pretty deep in the money at this point. It's
I
like
remember
30
when I first
cents.
started flying.
Very deep in the money. I'm doing 30 cents. The homies get a trailing stop. It's the best I can do. I mean, our next support here is this high. 431.13. Wow. This would have been a nice put after all. Lows. Gotta find support here, right? Dude, I called. I called. Another spade. Oh my gosh. Come on. I called that. GME's so weird now. GME's fixed. Like when you take your wild animal into the vet, return home. All the life's been snipped out of it. But yeah, low volume meltdown on GME today. It's kind of crazy. Kind of odd. He's sold for 140. No, at 247. Yeah, dude. Yeah, dude. You gotta leave one for the homies. Gotta always leave one for the homies. Sometimes they let you down, but when they don't, worth it. At least feed them a trailing stop. Or like a percentage if you're doing like 50 or 100 contracts. Maybe not one, maybe like 10 contracts for the homies. Or 5. Yep, I think that resistance might hold. Right here. It's still pretty early though, it's crazy. There might be an upside trade today. Not sure if I'll take anything else though. Oh, yeah. Yeah, I put a trailing stop on my last one. And it closed. Yeah, that's good. I'm content with that. It makes sense it would bounce here. I mean, after all the supports it flushed through. It's crazy. Big day on SPY. Okay, quads. Oh, one last new low there on SPY. Boink. Or we keep flushing. Didn't fully test that, I guess, but it's close enough. Close enough for me. Wow. There you go, there's your front runner. GME. Front running SPY to the upside. GME was a tell all day today. It was just selling off. But I just had to catch up with that bond auction. Bet this is the bottom for SPY. For GME. Slowly coming back up to VWAP. Or just small caps in general. I'm gonna grab a couple calls. Just as some YOLOs. Not really YOLOs, but with some of the profits from today. There's not really any pattern or anything, I'm just calling the bottom. Or trying to. Don't think we'll make it back up to VWAP today, but if we do, this will be an awesome trade back up. Position sizing on this was much smaller than this channel break, given the type of play it is. So it could still work out great, but not risking nearly as much. It's like less than half. And I'll probably hold it. Much more willing to hold it. Maybe into close, maybe put a stop, like break even on it or something. See if it's high enough for that. 10%. Yeah, maybe. GME, buy front runner. Got 30 minutes to power hour. Pretty solid bounce off the low there. Hey, look here. So this might be resistance. Maybe even the low over here could be resistance. Should be nice, but
to almost, it's getting closer. It's at 43.36 right now.
Well, Nicole, I think that's a great question because different parts of the market make sense in this environment. When you look at the run up this year, we know that the mega cap tech sector is
I'm putting a stop loss on these for break even.
While from a valuation point of view, there's a
I'll
lot
hold
of
them,
other
though.
sectors that really haven't participated.
Don't get
Back
stopped out.
Those names were pretty much negative for the year. So I think what we're seeing today, especially with the inflation numbers coming in a little hotter than expected, and also the questions around Fed policy, is that investors are coming back to the fundamentals. So earnings
Okay, so
right
they're
now
17%.
is going to justify those prices.
Just on the bounce.
And investors are in a wait and see mode.
So at this point now, I want to hit earnings and some of the economic prints we've gotten. So the inflation prints are showing that inflation's sticky.
That's correct.
A little hotter than expected. Friday, we got this great blowout jobs report. So the question is what the Fed does next. I mean, they can still do, running off of the balance sheet, which is one tool, and also raising rates. What do you think the Fed may do? Or what do you suggest they do?
Sure. Well, I definitely think that the Fed should take a pause and continue to give time to have these policies work through the economy, because what we're seeing this year is that the consumer's been resilient, which has actually kept things hotter than expected. Why some of these numbers and services are hotter is due to spending. So I think the Fed has actually given themselves a little air cover to take a step back and see how much destruction is their policies impacting the economy. But I think that moving forward, we need to hear, as I said before, from publicly traded companies about the quality of their earnings and their outlooks to see how they're positioning in managing cost and profitability.
And I want to hear about some of your picks today. I know you have Deere and Cisco, and I want to look at those. But just in the big picture, before we get to the specific names, industrial, small caps, healthcare, those are some areas you like. Why?
Yeah, so I think these are the areas of the market, in my opinion, that really haven't participated with this rally. So if you break down healthcare, that's a place where we can be offensive and defensive at the same time, considering the innovation in this space, but also the fact that healthcare is durable and has those free cash flows and a strong balance sheet that investors are looking for as we might be moving into a slowing environment. Industrials, great theme on infrastructure spending. Look at the level of spending that the government is putting to infrastructure as a percentage of GDP. All-time highs that we've seen over the last 20 years. And then finally, let's talk about small caps. Small caps are trading at a discount as compared to the rest of the market, and usually is the area of the market that dips first on concerns of economic activity, inflation, interest rates, but they're the first to actually bounce back once you move through those concerns. So again, I'm looking at it from a valuation point of view, not just chasing the sectors that have been leading us higher throughout the year.
Yeah, we've actually seen that. I mean, the Russell 2000, for example, when things are up, the Russell's up the most, and sometimes when things are down, the Russell's down the most. So it does have some volatility in the world of small caps, but can have a big bounce back, to your point. How about in the world of agriculture? A name like Deere is something that you like. Why is that?
Yeah, so Deere is a name that has a great forward PE, has not participated in this move, but has been investing in technology and infrastructure to support better crop yields for farmers at a lower price point. And also at the same point in time, the industry has held back on reinvesting in equipment. And so we're going to go through a period of time in the future where I think the industry is going to reinvest in Deere products and create an opportunity for Deere to expand its earnings while it's trying to grow its services business.
All right, and then you have one that's based in the UK, Ferguson, and some people, FERG. Some people may not know this one as well. Why did it jump out at you as a pick?
Yeah, I like Ferguson for a couple of reasons. Number one, it's a play on the dollar. Right now we see dollar strength in the market, but if we think about Fed policy adjusting, that gives likelihood for the dollar to weaken, increase the price of international stocks. Ferguson's based in the UK, but primarily Ferguson runs an HVAC, infrastructure, plumbing business. Really resilient when you think about an economy slowing because people want to stay temperate. Those cash flows are going to continue to be predictable.
Yeah, I mean, you talked about it being somewhat of a recession-proof play.
Yeah,
so
valuations are attractive again.
Yeah, and last but not least, you had talked about tech at the top, and Cisco Systems is a company that you still think has a dominant market share and dominant player. So is this a winner?
Again, I think Cisco is another one I like where I think it's going to show its durability over time. It has this hardware business that's established, but it's made the turn in being more services focused. Great valuations moving forward, strong dividend, and don't forget, Nicole, it just is in talks and trying to close on the acquisition of Splunk, which is another way to improve the distribution of their software for services, which they've been struggling with.
Yeah, that's a good point. On the big picture of the S&P 500 and facing all the inflation prints and all that, we're still looking at these earnings, and that's something that you're looking at. And tomorrow we'll have the banks, and I think there's a big focus on how the banks are doing and what kind of lending they're doing, because there is concern about a credit crunch, and that too could slow the economy.
Yeah, absolutely. I think what we are seeing in the data, and we don't have to hear about this from the large banks, is that we know that smaller companies are constrained on lending. Regional banks have been pulling back, and the cost of borrowing for smaller businesses are double what their counterparts are for large. So I think what we're going to hear from the larger banks are how they're managing risk on their balance sheet, how they're managing auto loan defaults going up, and how they're managing a consumer that might show some levels of just being a little bit tired. Right? I'm not saying spending's going to dry up, but I think they're going to get an indication to us to say how strong is this services economy going to continue as we think about things going into 24.
And when you hear from the likes of Delta and some of the airlines, I mean, they are saying a little bit about weakening demand, but that can be seasonal. It'd be more informative when we see the Prime Day that we just had, yesterday, and maybe the holidays. Are you expecting the consumers to pinch the purse in the holidays?
Well, I do think that consumers are being selective, and there could be some disappointment coming up in some areas of the retail market around the holiday season. But to go back to Delta or a Walmart as an example, I think what these companies are telling us is that they're trying to manage their business in focusing on profitability and cost because of those concerns that you're raising to the consumer, because no one is able to accurately forecast. Now, our view is the economy will slow, the consumer could slow, and you want to be with the companies that have great management and strong balance sheets to kind of weather through this storm.
Right, and that's the leadership
that
you're looking
that is correct.
for. Understood. Brian Vendig, MJP Wealth Advisors. Thank you for being with us. Thanks.
Thank you.
All right. right, still ahead, oil and gold.
Closing 10% there.
And a lot of back and forth, and particularly on the heels of what we've seen abroad. What's next for these commodities? A chat all about that and more when the watch list returns.
If it wasn't up so much on the day, I would close more, take more profit. Ooh, look at that flop. I want diamonds or a bunch of bricks. Jack King. No, no straight. Full house? Oh, yeah. 2 9s. No diamonds. Wow. He got... I mean, that flop favored him for sure. Trips. Oh well. I wish I got more contracts. This is quite the bounce. See if this support becomes resistance. Maybe close another one up here. I was planning on just kind of holding these till end of day, but I guess sprinkle a couple take profit sessions on the way. I mean, it might make me up. Still plenty of time. Hour and a half. Crazy. Three of a kind, got aces? Woo. I'm gonna try and slow play this now. Make them think I got a jack. They got the bluff there. Good. I think. I hope I'm... I guess there is a straight... A full house again? Dude, what in the world? This guy had a full house. No, this guy? No, he had trips. Wow, that is unlucky. Very unlucky. Closing one more here. Dude, I've had great hands, but just not quite the nuts, and then both of these guys. Up, psych you up. And Mawa Wabuino. Means good morning in Chichewa, Zambia, Malawi, and Mozambique. I'm gonna know how to say good morning in every language in the world, aren't I? That's what you're doing to me. Like you up. Wherever the heck those places are. Another full house, this guy. Wow. So that's the support from before. Seem to be rejecting it so far. 20 minutes to power hour, see if we get some push to get us back to VWAP. This guy with his full houses, both these guys. Pocket aces. Pocket eights. Oh. Guess I could have maybe bluffed her on the river. Didn't seem like one there wanted to back down from a bluff. Get a little head and shoulders up here. Fidelity's not updating, so I can't close anymore. That's cool. Close another one. I'm not getting any update in on pricing. I'm able to close it, but I don't know what it's at. Cool, good job, Fidelity. Way to go. They're gonna have to update their business model, or they're not gonna survive. Gonna be well learned real soon. Giddy up. Crazy how big of a platform this is for the outages they have is unacceptable. And then for how just glitchy and laggy and like, surprised they've done this well this long. Makes me want to buy some more hood stock. Holy consolidation, hood. Wow, been doing that for a year. Market cap 8.5 billion. Quarterly revenue 486 million. Actually making money on it though. That's good. That's a good sign, man. That last quarter, 25 million net income. The year of consolidating though, this option chain must be, yep, reflected of that. So I guess I could transfer to TD. That's probably what I should do instead of Webull.
Can you do it? Do you want to do it at 90, 85? No. So it's there as a bit of an issue.
But to your point, you'd like to see it refilled, but at this point, not right this
Oh, the
second,
reserve?
right? Especially when you
Jeez.
see $90 oil, right? Let's get to gold.
Better not.
Look,
Better
gold
not
is
refill it
often a
now.
safe haven. We saw it running up, particularly after the weekend that we saw of death and destruction, and you know, people run to the safe
Yeah, I think
havens.
is Fidelity just not
Today,
working now?
Gold is at 1883 a troy ounce, down about $4. Where do you see gold headed and why?
Oh my gosh.
Well, you know, if you step back from the current
Yeah, it
conflict,
seems to still be working.
gold was performing exceptionally
Not
well,
updating those contracts.
considering a stronger dollar, over
Not updating this page.
2.5–3% up for the year, and this notion that higher rates and a strong dollar would somehow damage the gold price, that has been a significant disconnect and something that has had people scratching their heads in the investment community. So I think it's performed exceptionally
Was there stop loss
well.
hunting
It was
on GME?
before the Mideast tensions,
No.
just on the year-to-date basis.
Maybe
I
why
think
the
it's
sell-off?
performing reasonably well as a safe haven.
I
Frankly,
mean,
it could be
this
performing
rally it had
much
on it
better. But at this
was
point, I think you'd
really
have to
just from the
assume that
SPY.
folks who've been
It had no
buying
strength
gold,
on its own.
to some degree, those who are buying treasuries,
You can see no
safe
volume
haven,
picked
they're
up.
really not thinking about the next
So
stage of conflict
had an
in the
opportunity.
Middle East.
It hit up on
I
that
don't think you're
resistance.
seeing priced in
So
to either treasuries
took the
or
opportunity and
gold,
sold
this
off from it.
notion that the conflict could migrate to Iran. Again, that's it, and all bets are off, both for the oil market and for the gold market. I'm actually unimpressed with the metals performance in light of what we had happen over the weekend.
Yeah, and you have a couple of gold names here. Tell me about
I
some of these
don't
gold
want to transfer to Fidelity because I've been the most successful in there with the day trading.
Bid and the safe haven move is,
I think
is
it's just
treasuries
because
and bullion.
I'm not
It's
trading
to mining
dailies.
companies.
It's a larger account.
But we
So
do like the profile of a couple
maybe
of
if I
names
transfer another
in the
brokerage, I'll just
space.
stick with
Agnico and
tomorrow's
Newmont have both been outperforming the HUI, which is the gold
and see
bucks
how that
index,
goes.
and they trade at steep
But I'm wondering
discounts
if
to their NAV.
part of the reason I
These
I
are
trade better on is
companies that are
because I'm
minting money today,
slower to
and
get into
they're being treated
positions
like they're going out of business,
because
which is
it's
kind of an
physically
interesting
so
scenario
slow to
if
get
you're
into a
looking for
position, like
value in the
to navigate
marketplace. You know, gold is a
around the
very
website and
insurance
get into a
policy,
position.
the physical metal.
So I'm wondering if that kind
But
of
a
that
play on that sort of a
that barrier of
non-expiring
entry
call option, man, something like Newmont.
that's been
and
an actual
Agnico,
benefit.
Really good management,
I don't know.
great properties, great growth profiles. I would own them. In fact, I do.
It makes me hesitant to transfer out
And just
too
a big
soon.
picture market thought here is, you know, do you think
But
there's the
messed up.
Santa Claus rally and things
Okay,
like
I'm gonna
that?
close another one.
You know, our indicators, which is a combination of credit spreads and CDS pricing and things like that, we see pressure emerging in the markets. You know, we had so much pressure in the bond universe coming into
10 minutes
last
per hour. See if we get a break.
You could have said we were
We
very
have an
much
inverse
on
head
the
and
edge
shoulders
of
if it wants it.
a breakdown
Few ups above us.
in asset prices.
But this is now a
globally.
resistance
And again,
from
this
the low of
is,
the other day.
we're talking about pressure in the global bond market. Because of what happened with Hamas in Israel, some of that has eased off a bit. And so you have had sort of, again, a relief rally, if you will, in global bonds. But today,
Let me guess, you have a full house
we see
again?
pressure in currencies. Today we see pressure in commodities. Today we see pressure in fixed income and equities. This is a risk off
see it?
day. I don't know what that portends, but I think
You've gotten like 6 million of my chips. Why are you playing so tight now?
Markets in here.
Oh, jeez, they're just straight out there. Dang it.
As to, intensified concerns. And, for me, the line in the sand, if I was sort of saying the mood shift, you can sometimes wear a mood ring and I'm stressed today or I'm happy. Or the mood ring for
let's
the
see,
market
10 minutes.
is
There's like a 10-minute Fugazi into power hour too, I've noticed.
to get below 4,200.
Breaking through that resistance. We might see VWAP.
Serious bear market dynamics, which should be respected.
Yeah, all right. You have a next stop really quickly. If you break
Still not updating the price in these contracts. Great.
That's kind of my all bets are off number, because at that point you're seeing not only deterioration within the financial markets, but some of your leveraged players are going to be under pretty intense pressure.
And tank below $10 a share. I think we could see single digits on it.
Look at the yen. We already know that
That wouldn't surprise me.
Community is not in a good place. Your risk parity trades. There's a lot of folks that
we're right now
have
hanging around
lost
this
on both sides.
historical
And I think,
support.
If you see a decline much below 4,200,
it says $10 in this chart, but that's wrong.
and
It's
you're
actually
still
15.
Seeing rates on the increase.
So tons of liquidity below here.
You're talking about an unwind
if it does break,
asset markets, which
we've
would
got
be
room down to single digits.
Not healthy, not controlled. So
Understood. Got it, David. Thank you so much. David McElvaney. Hopefully we don't see that. McElvaney Financial Companies. Thank you, David. Still ahead, our panel's ready to talk all about the airlines after we got the latest report from Delta. What you need to know. We'll be right back.
Time for some all-ins. Nope. Let's go again. Hey, I gotta take her. Jack Queen. Definitely favored. Got a flush. Well done. That's how I get a little refill. Refill on my chips. Okay, 8 minutes to power hour. Close another one of these.
And what about you, David? What do you think?
Well, I'm monitoring this from the perspective of looking at digital demand signals. So traffic to the website, usage of the airline apps.
Verse 6.
And Delta comes out pretty strong by those measures. Yeah, I mean, the reason it's interesting is it shows the interest of consumers of doing business directly with the airline. So booking directly with the airline rather than through some kind of online travel agency. You know, both Delta and United were up strongly in this past quarter. Delta was up about 17%.
This guy's slow
Internationally,
play.
a little bit
The
more
heck?
than that in the U.S. And United was up 18.9% internationally, over 20% in the U.S. So I might expect United, when it reports coming up soon, to maybe do a little bit better. So that's one thing of interest. I mean, in that scope, we do see Frontier Airlines, one of the discounters, doing even better. I mean, they were up 28, nearly 29%.
Why minimum bet? Why'd you do that?
So that's that's strong, but they are a smaller. They have more.
Yeah, understood. So you're looking at the traffic and how much people are using the apps and such. Was there anything that surprised you, David, quickly on any of the stats that you follow?
Well, just sticking with Delta, one other thing that I saw looking at iOS and Android app usage in the U.S. And the usage of the Fly Delta app is interesting because that is something that the more loyal people are going to use. People who are engaging with the loyalty program, people who frequently book through Delta, and that usage was down a little bit for the quarter. Now, I don't want to read too much into it, but I will say that United Airlines was up over 26% for the quarter in their monthly active users. That's interesting because of they had this whole dust up with changes in their loyalty program, changes in their rewards, where even the CEO said that perhaps they made too many changes and needed to retrench. That may be an indicator of some consumers being involved.
Yes. Thank you. Thank you both. Nicholas Owens of Morningstar, thank you. And David Carr, Similar Web. Thanks so much. Good to see you, folks. Thanks for being with me here on the watch list. I'm Nicole Petalides. Keep it right here. Market on Close is next.
We missed power hour. If we get a break on this channel, I'm gonna close out all but one. Leave one for the homies. 2 pair. No re-raises. Guess there was a straight out there maybe. This table has been amazing. Pocket nines? A full house again with this guy? Oh my gosh. Bluff it till you make it. On the river. Oh boy. Alright, I'm gonna close the power hours here. Alright, closing out those last 4. Leave 1 for the homies. Left 2, whatever. Oh, it left more. Five king, cool. King with a bad kicker. No straight for me. Still have not gotten updated pricing on this contract. Well done, Fidelity. Do a trailing stop on the last one. Club's got there. Anytime I get a hand, it's like it's just always a better one out there. There's always like 7 people seeing it. Flushes beat straights. Do with 20 million of my chips just bailed. Those are like literally all mine. 6. Gonna move to VWAP for that final contract. That'd be neat.
Spread had been doing. Okay, so 10s to 2s widening out, getting that good style of
once this contract closes out and review trades and probably cut out there.
On good economic data the last few months. And then from Friday into yesterday's PPI, we get the 10s to 2s flattening back down as the 2-year starts to show a little resilience, and the odds of a hike creeping, odds of a hike by the year are creeping up the last 2 days. But then look at the far right part of the screen. The yield curve steepens back out. This is where things get kind of complicated because there are good and bad ways bonds sell off. And selling off on auctions is the bad way. That's the way I would describe it. So even though the yield curve steepening up until now has been something generally encouraging, because our data have been way better than expectations and the Fed hasn't been forced to act, today when you get the auction showing weak demand, your long bonds are selling off pretty hard. And so we get that yield curve steepening back up. And the market's not a big fan of that. So the market's also not a big fan of yield curve inversion flattening either. So that's what you want to watch for. It seems like we're starting to understand what makes the stock market go tick here. When yields
right when you say that,
widens
it's
out
doing
on
something
good
different.
economic data without any need for hikes, like we got the last couple months, stocks can withstand
Sorry,
that type
Why
of
is not
higher yield
flashing?
environment.
Did you not close your
If we go
puts?
back to last year's flattening or inversion, equities probably aren't going to like that because it means that the Fed might have to hike or that the growth is not there. Or if we steepen on bond auctions, meaning that investors aren't there to
No,
scoop up a lot of
SPY's
treasuries
back
that we
to
gotta
safety
sell. That's
here.
not exactly comforting either.
Or could even do this,
So no matter
the
how you
VWAP.
frame it today,
That's a
stock
pretty big
market
bounce, so
does
I'm not
not
sure
like
if it
the
needs
move
it.
of bonds. Okay, the dollar too is also generally a tell. When the dollar's up 0.75%, it's usually a pretty risk-off day. Now, if we look at treasuries just for a second, particularly on the 30-year, and look at the intraday move, you're going to see where a lot of that selling came from after the auction, which had tails, which means that investors had to pay up a meaty price to get the treasuries off their books, and so the government rather. So 30-year moves pretty quickly here to the upside. Market, not a big fan of it. Here's the thing though, we are still under recent highs for all of the interest rates. For the 10-year, our high is 4.88. We're at 4.7 right now. For the 30-year, we right now are at 4.86. The high is above 5. And for the twos, we are also off the highs of the year, as right now 5% is still below the 5.1 we were at last month. This is definitely a test here for stock bulls to see if they can withstand different types of fluctuations in the bond market that do signal yields staying higher for longer alongside the Fed's higher for longer. This is really the environment that we're trying to figure out if equities are going to do okay.
Yay, this account's over 25K again.
Were up on the day. There were some good reports about demand coming from Taiwan Semi, which does have implications for NVIDIA and others. And chips are still positive on the session. It is easily the most important sector for a market that has been driven by big tech and semiconductors. And with earnings coming up, pressure's definitely on. As you see throughout the day, a little bit of a fade in those names too, though, but still not hard enough to break the NASDAQ. Also, as far as wild cards go, continuing to watch crude oil. Bit of a
Oh, you took the
turnaround
calls?
from an early
Nice.
pop in WTI. Energy bulls unable to really keep crude bid above 85
Bottom
bucks. That
VWAP
might be a
band?
little bit
Talking
of a
about Bollinger
silver
Band?
lining in the session that at least
Look,
right
VWAP
now we
band.
don't have to contend with further explosive gains in the energy inflation. So it is quiet session here.
Not like it matters, I'm
One
just
more
trading cash
tomorrow,
anyways,
by the
but
way. Sentiment in the morning, but not a lot more.
Another,
data
what,
other than some
75K
Fed
to go.
speakers on the calendar. Kevin Hankson and Renita Young here with me. Kev, let's talk a little bit about how the market took a turn for the worst here. It seemed to be pretty clearly tied around that auction, but bonds were already selling off. The dollar was already higher since inflation came out. It just seems like it built conviction throughout the
I
day.
think I'll just move some money out of this into another
Today's the
account
story. If you're a trader
and then
watching these
transfer
markets, Oliver,
out of
today's the
Fidelity
story of
forever
body blows
and ever.
to the market, right? And the market hung in there for a little while, but eventually
might
the
put it in
body blows
Robinhood.
take their toll on a market, and you saw a gap.
Robinhood's nice for long term, actually.
The 10-year yield around 7:30 this morning when the CPI data came out. Remember, we were 4 days up, finishing Wednesday, and pre-market we were up going into Thursday. And then the tone changed, Oliver. The first one was the CPI data that the market didn't like, and then you mentioned the second one. You
Nice,
see
I'll split it with
another
you.
gap in the 1-minute charts in the 10-year yield, and that was when the results of the auction came out. And oh, by the way, Oliver, yesterday's 10-year note auction was very weak as well. So that's 2 in a row. The 10-year note, 30-year
VWAP
bond,
bands.
back-to-back very weak bond auctions.
Is it like a setting under
So
VWAP?
you saw what
Or
happened
is it a
at
totally different,
7:30 this morning, Chicago time, when the
totally
CPI
different
data
indicator?
came out. The tone changed in yields. The tone changed in the U.S. dollar.
Sorry, that was me.
And throughout
I get
the
stopped
day,
out?
you see a gradual increase
No, I'm not. I'm still in
all
it.
day in yields. You see the gradual increase all day in
Let's
the
see,
dollar.
indicators.
Accelerated when that bond auction news came
VWAP
out.
bands.
And Oliver,
Look at you.
This is just a case of
VWAP bands. I'm gonna have to look into
when
that.
the market finally, right around 11, 12 o'clock, succumbed to the
What are we
pressure of
looking
the
at
body
here?
blows and headed lower, Oliver.
I like the way you described that because even though the auction was an event, we can't dismiss that inflation was
There's
warm
VWAP
this
and
morning.
VWAP bands.
PPI was warm yesterday, and we started to see a little bit of a turn in bonds
I had a straight.
even in the
Whoops.
last 48 hours. So
They're raised.
it kind of now is in the middle of a range for the last 10 days, of course, because we had the drop in rates. Now we pop back up. VIX at 17, Kev. I mean,
It's
that
kind of like
doesn't
Bollinger
scream
bands.
like,
Where does it get this
panic
data?
in the market.
Reminds me of Bollinger
Well,
bands.
coming out 4-day rally, you're not surprised that the VIX had
Volume
been
weighted
under
average
some
price
pressure,
bands.
but it's bouncing here today.
I guess
It's
Bollinger
up,
bands is based off
a
of moving
full
averages.
point.
This is based
So
off of
that's not insignificant,
VWAP.
especially going into a Friday, Oliver, and coming off of.
Doesn't
a
like
lot
to
of
be out of
times
the
when you
VWAP
get a
band,
big
I imagine,
number,
just like Bollinger.
VIX will increase into the number, and then no matter what it is, it decreases after. VIX holding in there up a full point. So I think the way we end the week tomorrow with we get consumer center in at 9 o'clock Chicago time. So one more big data point for the week, couple more Fed speakers, and how we finish this week going into a weekend.
That 6 is
where,
high.
Some of the stories from
Ace.
Gaza and Israel are
Nice.
starting to hit, and some of them aren't real pretty. So I'm sure there's some escalation risk going into the weekend, both from UAW escalation and from Israel Gaza escalation, Oliver. So yeah, there's a little bit of risk-off tone going into a Friday.
Is this like
And earnings tomorrow too.
standard
to, throw in the
deviations from
mix,
VWAP
from
maybe?
the banks.
But no, because
financials are getting smacked around
it
today
moves.
as we get the moving
It
bonds.
fluctuates
All right,
like it's
now let's find some places where there's
moving with
some
volatility.
silver lining, always seemingly in tech,
Just-
giving us
I don't know
some
how Bollinger
confidence
moves.
for Nasdaq bulls here, Renita. Amazon's
I'm
still
probably
positive
out of
on
that
the
call
day.
now.
Apple's still positive on the day.
Yeah, okay.
A lot of these stocks were
All done
having
on the
a
day.
darn
All right.
outright good week.
I'm gonna
Talk
close
about
that out.
52-week highs in Meta.
I did lose like
Alphabet. There's actually some
25
news
million
behind it
on the
because Amazon's numbers for
WSOP.
their big sale day seem to be pretty good.
Oh yeah,
20.
they were pretty
That's
good.
okay.
And for the most part today,
Like Jack
I
A's,
saw a
come
little
on.
fluctuation in this stock.
All right,
You know,
couple
we did get
all-ins.
those body blows to the greater market, but the Amazon bulls have succeeded in bringing it
Let's go.
into the green.
All in until I
So,
lose.
The big Prime Deal Day, did I say that right? Prime Big Deal Day. That happened over the past couple of days, and the company said that it was better. It outpaced last year's event that happened in the
I didn't even
fall,
get someone to go
but that people did not spend too much
8-9,
money
you're
on
probably gonna
big
beat me, aren't
ticket
you?
items. They spent more money on the necessities. So they instead got things like protein powder, Amazon Basics batteries, and liquid IV hydration packets. To be
Liquid
sure.
IV hydration?
Yeah, apparently they sell those on Amazon.
All right.
But
Okay.
I would not expect anything less because
I thought
Amazon.
it was more like a summer product, you know?
Well, you know, maybe
Partying
some.
at the pool and
But maybe some people ran the Chicago Marathon on Monday, right, or Sunday.
Liquid
and
IV
they needed the
hydration
liquid
packets?
IV afterwards.
That's a hangover
I'll say that to be
product.
Sure, people still bought plenty of AirPods.
Never. Interesting. With a needle? Packets. Put it in with water, maybe. Just like electrolytes. Okay. Review the trades today. I'm gonna look into that VWAP bands. Guts. That's interesting. Oh, sorry. Oh. Bands. The VWAP plot is accompanied with two bands serving as overbought and oversold. Upper band overbought is plotted with a specified number of standard deviations. Above the VWAP, and the lower band oversold is plotted similarly below the VWAP. Looking back, so does it change on time frames? No, it doesn't. That's nice. I want to figure out how to anchor my my moving averages to a time frame. I don't think you can do that on Webull. Is this, let's see. Yeah, you can't get on the daily. See it on the 4 hour, but yeah, it's anchored, so that's nice. Just like the VWAP. Okay. Just want to see how it respects it. It definitely goes outside the bands. Likes to revert back to the VWAP though, of course. Huh. Almost like it, right there, like flushed from the band to VWAP. I don't know if I would use this as a, I don't just use indicators for trading, really at all. I mean, look at this. Yeah. Yeah, not gonna be for me, not for now. Alright. So, today I didn't trade on my small accounts because they're basically worthless. No buying power, more or less. I have a little bit, so I could have done out the monies dailies like towards the end of the day, and I was planning on it, but I forgot. Anyways, this morning, here we are, up this morning. I deleted a lot of my lines from the morning. I only had a few, and then it just like, it just looked like it was choppy, and so I just stopped. Thankfully, I was busy with some other stuff today, so I didn't overtrade. Able to stay distracted. Let's go over the trades. Stay distracted until the right trades appear to present itself, and then went in heavy. And then it was very rewarding, of course. That was a much larger trade than I imagined when I opened it up here. I thought maybe the VWAP, maybe low of day, and that was a huge move. So, very awesome. And then the bounce move was pretty good too. My position size was much smaller on that though, given that it was just kind of a YOLO bounce to move back up to its moving averages, maybe VWAP. Alright, so just go over these. Started with calls at open, there you go. 5 calls at 950. I think it's just the bottom of the channel, catching the bottom of the channel maybe. Not sure why I got calls here. Oh, it's actually on this candle. Yeah, breaking the channel. 950. 5 there. Sold those 5 at 955. Yeah, so on this candle. Yep. So it did stop out of him, which was good. Just pretty late. Took a loss there. That was actually a pretty sucky loss. Bought shares of We. Which I don't think I've stopped out of yet. Gotten pretty close. Okay, so yeah, took that loss. And then bought 5. Yeah, I actually whipsawed this morning. Only let it happen like once, and I just stopped. Thankfully, I didn't get too aggressive with it. 1002 bought 5 calls, buying tomorrow's at the money. 1002. Wow, bottom tick that one. Wish I had actually left my lines here to see what was going on. Huh. Why did I get calls there? For those I bought puts, never mind. Yeah, that makes more sense. Well, yeah, this is the whipsaw. I bought puts right here at the perfect low of the day. Perfect spot to buy calls. Got puts, 5 puts there. And closed them out at 1004. So at least I didn't ride that one too long, realizing I am out of rotation with this seesaw that we call a stock market. Then I was like, all right, I need to chill for a bit. Then 10:06 comes around, and I bought calls. I realized that was the bottom. Should have inversed myself, and I did. By the time I was able to get into it, though, with Fidelity, I was right here. So then I was into calls, 5 of them. And then sold those 5. All 5 of them. Here. That's no, I'm sorry. I bought 5 more here. Bought 5 more here. Yeah, I was averaging in. Interesting. And then bought 5 more. Oh yeah. Bought 5 more right here. Whoa, SPY rip in there. Dude. One for the homies didn't work. It stopped me out. We're getting to VWAP. It would appear. Dang, dude. Yeah, I think I'm already out of all of them. Oh well. Yeah, so then this, I was expecting the cup to complete, so the bulls are in control. Retested the high at least. And we didn't get that. So I had 15 and I sold them all right here. So another failed trade. And by this point I was down not a crazy amount. They were pretty small moves, but I was down. And I saw the whipsaw, I saw bulls weren't in control, and I saw it was just making this larger down channel, and I'm like, I'll just sit out. This isn't good. The chop. It's like, no. I thought it could still come up, but it's, yeah. 1234. Bought 5 puts. So waited a couple hours. Okay, no, this was the trade. Yeah. So from here, waited through all this chop. It was tempting. I'm like, but yeah, didn't do anything. Good on ya. So thankful I didn't even let it go up here and pass the high of the day. Just left it alone. Didn't see any setup. And then had a channel drawn here. Is this the same one? I think so. Interesting. Is that the one? Yeah. Anyways, I did start to get puts up here. I've deleted a lot of channels. But I started a little starter position up here on puts. Like here somewhere. Let's see, 1234. Yeah, right here. 1230. So right here, I got 5 puts. Sold one at 1252. So right here, sold one. So we're getting an R side divergence too, which was helpful, but there were also channels there. If you look, this high compared to this high was higher, R side was lower, showing weakness. Kind of a double top also right here. So anyway, sold one there, and then sold the 4. Wait, what? What is this? Oh, canceled. Sold another one at 1257. But right here. I only had like 3 left at that point. Again, I was waiting for... No, the channel, I think I had a channel down here. Yeah, I deleted that one too, shoot. Right here, because I bought in right after the break. But yeah, sold one right there. Meaning that it's at the bottom of the channel. So only had a few. And then at 1, that was right when the bond auction came out. 1 o'clock literally on this candle. I bought 10 with the break. I did have it. You can see this line right here. It was the support basically all day. Right here, here. It broke that. Right at 1, bought 10. So went in heavy. And then 25 seconds later, bought 10 more. But yeah, it was a little sketch. And we were close to VWAP, which I didn't like. Dang, why does it make it back up to VWAP? Got a little wider spread. I'm getting used to the trailing stops. I don't usually do those, so I think I had 20 cents, maybe 25. It's okay. Yep. So then I was in heavy with 25 contracts, I think, or so. And then sold my first 3 at 102. So right here. Yeah, probably at this low right here. Sold 3 there. Sold 1 more at 104. Right here, that low of day. I think this was the low of the day. Yeah, sold 1 more. No, it wasn't. It was just this low. I was just trying to take some profits. I was still, I think, maybe I was green on the day. I was green on the day with my position, but it was still open. So that makes sense. What I had realized was, I think I was probably red. So that's where it's kind of that doing my best to just be patient closing it, but also don't want to turn what could be green back into red. Sold 5, so this is a pretty big one. Sold 5, 107. Could have gone slower, of course, in hindsight. 107, so that was the low of the day. I like that sell though. I'm fine with that. That very well could have been the low of the day, and we could have bounced. Sold 5 there, and then I was green. Then I was happy, and I could be more patient. Sold 2 at 110. So next little consolidation area. And I was selling 1 at 127. Go down here. 1 at 130. Another one at 130. 1 at 133. 1 at 134. Yeah, I was really wanting to get out. I just wanted to realize the profits. 1 at 135, which is actually here, so it dumped even lower. Another one at 135, and then at one at 136. You just gotta like count 5 minutes between selling. I should probably do that, like set a timer. Because like if you're past support or you think it's not gonna go any further or whatever, like scaling out, just like sell some, wait 5 minutes or however long, 10 minutes, 20 minutes, an hour, however you want to do it. Otherwise you end up just doing this at 136. Pulled that one. I was getting down to just a few at this point, I think. And then 142. Wait, 142. Oh no, we're past that. 143, yeah. And then I had a trailing stop for the last one that closed at 211. Yeah, so yeah, I only had 1 contract for this last drop. I sold most of them right in here, which I'm happy with. This was a trailing stop one. That was the one for the homies. Looks like it filled. The order date was at 211. I don't know when it filled though. Oh, 215. So yeah, right here on this little bounce it filled. And then I wasn't going to just take random calls, but seeing the chart, seeing where it come, I just decided to take some calls. Given I was up so much, also it's a pretty easy decision to do it. Little YOLO. Buy came back down. There you go. So at 220, then I got 10 calls. So right here on this candle. So this was also support in my lines here. Pretty major resistance there. And see the volume pick up in this area. And some nice green volume. Anyways, got 10 calls there. So much less stressful once you're up on the day. 233 right here. Sold one. Sold one at 237. This was prior resistances, supports. Sold one at 242. Right here. Sold one at 248. There. One at 253. Right here. Got that nicely. Then sold the last four, or sold four more at 3 o'clock, right at power hour. Because it had just broken this channel, which ended up being just a little, not a real break. But yeah, unfortunately sold the last four there, no problem. This isn't a big difference. And then put a trailing stop for the last one for the homies, which was actually a lower fill than what I got on my last four, so I beat the homies this time. And this trailing stop filled at 310. It was a, let's see, 25-cent trailing stop. So it happened on that flush, I think. 310. Yeah, this candle right here stopped me out. There you have it. Those were the trades today. On this buy, and then picked up some WE. Have a stop loss for this one a little further down, which I don't know if I want to hold this overnight. This might gap down. Not sure. Yeah, I'll probably close this right now. I don't know. I don't like that engulfing candle. It just looks like consolidation potentially. Got a inverse head and shoulders and a head and shoulders. Broke out of that channel, making that right shoulder, which none of that seems good. I'll close out of those. Small loss on those shares. Okay, close out of those shares. I don't think I had any other trades today. Patience was a good one. Patience was the winner for sure. Market ended up giving us an awesome trade, which was that bond auction. Let's see if SPY makes it to VWAP. I think it'll still be engulfing. Nice, guys. Well done. I was able to close 4 positions, day trade 3 positions, open 6 positions. Nice. Busy. Today was slow for me, actually. Wasn't busy. I mean, scaling out takes time, but I didn't really. After I whipsawed in the morning, I didn't trade, which was such a blessing the whole day until that channel that broke at 1 o'clock. And then it was just scaling out. Very cool. A quick thumbs up. Thanks, Jay. Appreciate it, man. Thanks, guys, for your likes. We're 13. 13 on the day. SPY looks like it wants to climb back up to VWAP. Yeah, I guess maybe. Happy I'd stopped trading after the whipsaw in the morning, and I was content to just not do any more trades today, but I also wanted to be available and watching it in case there was something that set up, and it ended up hanging out nicely for that. Even if it was just a move from this channel break to VWAP, which probably would have been more than that being channel break. Would have been still red probably, but not as much. But a low of the day would have definitely been green from here to here. So this was just all reward.
Call volume about 6 times normal daily average volume, so a lot of flows into the call side. But put volume actually up about 7 times normal daily average volume that we've seen over the last week of trading. So a lot of option activity in there either way on this report that the deal might get approved in China.
Okay. And it's not just Broadcom. I mean, the group is still positive, one of the few. It again is just an incredible sign of resilience.
AMC up 5.6, $11. Wow.
Defying technical support
Gotta respect
in the
that
most
channel.
important part of the market, frankly. Just from a market cap, okay, the index, the
Very
NASDAQ
respectful.
held at summer lows. Why? Because chips held
Going
at
for that
summer
gap
lows.
fill.
Why?
That was a big
Because
resistance
it's still
actually right
trending
there. It
higher.
just broke.
Because Broadcom's
1070.
still trending higher. Adobe,
If we can hold above it today.
side. TSM also up as there was a note out from Morgan Stanley analysts saying
Like
that
to
their
see
guidance could
AMC back
surprise
at
to the
40
upside.
bucks.
So even though both these stocks
Fill in
took
this
a dip
gap,
today,
maybe.
they're still positive heading into the last half hour here.
Yep.
Okay.
For sure.
So the trade and the action, I mean, how long does this person need this little bid to last?
Just 8 days, but there's a lot of short-term positioning and near-term options that expire tomorrow too. That's typically where you see those one-day options. You'll start seeing a lot of option flows. The stock is off its high for the session, but people positioning in the short term, expecting maybe we'll get an announcement by tomorrow. But this trader's banking that we're going to get some type of announcement on approval out of China over the next week.
Okay. All right, also positive. We talked Amazon and the big Prime Day spending that's happening, or saving rather. What's the trade you saw here? Something bullish too?
Yeah, they didn't actually announce that the actual totals that they got, but they said traffic was higher for Prime members this year than last year. That's a good positive sign for this company. Stock's still up 57, 58% so far this year, so it's had a good run. That Loop Capital put out a $200 price target on it today, so some positive momentum in there, and they were buying calls. And the one that stuck out to me was really short term, expires tomorrow at the close, so basically a 24-hour trade. Over 70,000 of the October 13th weekly, the 134 strike calls were scooped up. Average debit of about 80 cents, so that break even of 134.80 over the next 24 hours, about 2% above the current share price in there. Now, the stock did trade above 134 earlier in the session before the market got hit after that dismal 30-year bond auction caused a spike in rates at this point. Call volume is double normal daily average volume that we've seen over the last week of trading. So yeah, and typically Amazon trades a lot on a daily basis, option volume anyway, but to see a name like this trade double the amount based probably on those earlier gains, the stock was up 2% at one point in the day.
Okay. Again, impressive stuff with Amazon holding where it's been trading, and Broadcom doing the same. Yesterday we got the fresh 52-week high, and Meta, Alphabet the day before. So there's a lot of stuff going on in the mega cap world that is still very encouraging.
Are they hiding out in these names?
They really are.
I think they are too.
The whole notion of like the big cap safety trade is, right. I feel like at this point, the best explanation.
Free cash flows, decent balance sheets, growth is still there.
Yep. And especially if you kind of organize them by their quality factors of cash flow and shareholder-friendly activity. Apple's at the top.
Yeah, I've got AMC.
Out to records. NVIDIA the same too, because some of these they still have some of those growthier, frothier areas of their business, like Amazon's cloud, still below the highs, the record. But okay, very encouraging here for bulls for sure. 36 basis points is what the Nasdaq has to take back in futures to end positive today. You got to trade Delta. We just ran through the numbers. What do you see in options?
A lot of call buyers in there trying to scoop this dip that we're seeing, because if you look at the top and bottom line numbers, it weren't that bad, but guidance a little bit lighter than expected.
Our guess was very bullish.
But they were buying some November options, so giving themselves a little bit of duration, about 5 weeks till expiration. On here, I saw a trader come in and scooped up 10,000 of the 37 strike calls. Only paid an average debit of about 80 cents on those, so the break even 37.80 over the next 36 days. That's just about 7.5% above the current share price. This stock was above 37 after the announcement, the earnings announcement came out pre-market. Traded above 37, so you don't need that big of a move. Although 7.5% move to the upside over the next 36 days, you've given yourself some duration. Maybe the stock's going to bottom out because the numbers still look good. The CEO, Ed Bastian, he's normally pretty positive on his conference calls, and he was again today, saying that demand is not waning. The one caveat, gas prices. They had to really jack those up by over double digits based on what they gave last quarter, what they were expecting to pay a gallon for jet fuel. So that's kind of probably going to squeeze their margins a little bit, and they're not being able to pass off some of those charges on to the consumer because some demand was waning just a little bit. But call volume about 3.5 times normal daily average volume that we've seen over the last 5 trading days. More than double the amount of calls traded than put. So I think a lot of people positioning for maybe a rebound over the next month or so.
All right. And that would be the trade that our analyst just walked us through to buy the dip. Delta and United.
Best in breed, that one.
Apparently. Okay, that's the message. All right, thanks, Tom. Interesting trades, a lot of bullish action in the options market today, and in particular in some of the mega caps that are holding things together. When we come back, we'll take a look at the commodity world as a fade in crude oil gave a false hope to energy bulls this morning. The dollar kind of wreaking havoc as a 70 basis point pop in the greenback is certainly a force to be reckoned with for commodities. And then we'll get an update also on another consumer staple sell-off. They're dropping like flies.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out.
I almost made it to view up there. Carvana down 12. Wait, do I have? Can't remember if I have a Carvana. I had a Carvana put. I think I ran out of time on it though. What's up, Julian? Let's see. Oh, I haven't checked. I stepped away. 16%. To give company $4 million loan? Is that bullish? I mean, I guess because it's personal, but kind of sucks. I mean, it's cool. The CEO believes in it enough. I guess that's the bullish part of it. Bearish part is, are they so strapped that they need $4 million? Let's see. Interest free. Convert into equity. Wait a minute, what? Announced today that has entered into a loan agreement with its CEO Roger Hamilton to provide the company with up to $4 million as an interest-free loan to be converted into equity as ordinary shares upon the same terms at the next qualified financing round. Huh. Roger Hamilton said, "I founded this company and fully committed to our mission and future success as the company continues on its growth path. And as we continue to sign new partnerships and joint ventures that harness cutting-edge technology to serve our students, users, and partners in a unique way, I want to ensure our company continues to grow without liquidity constraints, while we take the time to ensure we attract the right investors who are aligned with our long-term success." So this is basically, he's loaning the company $4 million interest-free that he will buy shares with, will be converted into shares next time they get financing from someone else, sounds like. So he's basically bridging the gap between now and when they get more financing. I think that's what that means. And upon receiving that financing, that loan will convert to shares. So it's basically like insider buying, more or less. Kind of a unique way to do it, though. I've never heard of that. No, it's like the CEO is buying $4 million worth, basically. Pretty cool.
But, you know, is it going to continue to strengthen or is it going to ease? I think if the dollar was to roll over, that would help our exports. And that would probably help a little bit of ease on, you know, maybe create some more demand for oil here at home.
Good catch.
If you look at RBOB,
Good catch,
I
Julian.
don't get too far in the woods, but RBOB finished at about a 3-month low today. So it tells you that for whatever reasons, there's less people that want that need gasoline right now, and that I think is what the market's really worried about. Big picture, 30,000 foot
new
view.
lows there, man.
You know, is our economy slowing down? You know, have 8% mortgages finally slow people down? Has all the tightening finally kicked in?
Sure.
And unfortunately, and unfortunately, I think if we hadn't had the situation devolve like it has in the Mideast, you know, we'd probably be in a different situation as all. So as we digest that, I think that's key. But at the end of the day, we're going to get back to, you know, what do people need? What do people want? And if we're producing more of what the world wants less of,
been a good day. Thank you guys for your support. I'm gonna cut it early today. We already reviewed the trades. You guys saw what happened. SPY's down 0.5%. Bond auction is the trigger for this catalyst to sell it off. We were just following TA, and you know, it's crazy. GME really started the sell-off. Been selling off all day. Just doing its own thing. Looking bearish there, down 5%. AMC still looking strong, almost 7% now. Wow. So AMC broke above this this resistance. Curious if it holds above there. If it finds support back at that 1070. Looks like GNS had news. Shout out to Julian for that. Roger Hamilton gave a $4 million loan, which he will convert into equity once they get some more financing. How I understand it. A lot of stuff's red that had the bounce. Run. Yeah. Fine. Maybe climbing back up to VWAP for end of day. We'll see. Today is setting up an engulfing candle though on that daily, which quite bearish. It's not the same, but the start of all of the downtrend was with this engulfing candle. So that's crazy. That was so long ago now. That's wild. We'll see if this is the high or if it could be a false signal. Could chop around, fill this gap, maybe retest the top of this channel. That's kind of what I'm looking for some more Fed puts. But yeah, thanks for the support today, guys. Appreciate it. I think you're going on a walk. Okay. Software using this is Webull. It's linked in the description. It's a good platform. I like it. You get a bunch of free stocks if you sign up with my link. So do it. Thanks, Guts. Thanks for the thumbs up, guys. Thank you, Maui Sam, for your kind generosity again today. Ice cream for the children. Aye, Captain. See you, Psych. Thanks, Guts. Thanks, Dink. Thanks, Julian. Thanks, Jay. Good rest of your evening. We'll see you